Run it, I can't take no loss. I don't even know what it costs. I hit the ground, then it go off. Yeah, hit the ground, then it go off. Yeah, I can't take no loss. I don't even know what it costs. Yeah, I hit the ground, then it go off. Yeah, hit the ground, then it go off. Yeah, run it. Ooh, I really feel it's my time, think it's my year. Yeah, I really feel it's my time, think it's my year. Yeah, I really feel it's my time, think it's my year. Yeah, I really feel it's my time, think it's my pen ready. Used to hold myself back, my self-esteem been petty. Gotta keep on chugging, ran through everything in front of me. Might smoke bed heavy, got a whole agenda. Can't aspire to get ahead, so bump that, it's no surrender. Got a dollar flipped up, I'm trying to get it in FT to get them when they're hand and crypto. Learn how to fix that. I don't really hold out of books, but I'ma learn how to fix that. Some opportunities and never come unless you paying attention, so no, I can't miss that. Moving, MVP, I got the record, I might have to prove something. Big jumper worthy, they gon' have to retire my jersey early. Whole crew coming, had to work something, cause I had nothing in my pocket. Yeah, I did all that. Big plans, partners trying to make profits. Yeah, I did all that. Work, sweat, and tears breaking, even no ends. Yeah, I did all that. Had to make it happen. Putting hours in my practice, I did all that. Yeah, I can't take no loss. Yeah, I don't even know what it costs. I hit the ground, then it go off. Yeah, hit the ground, then it go off. Yeah, I can't take no loss. Yeah, I don't even know what it costs. Yeah, I hit the ground, then it go off. Yeah, hit the ground, then it go off. Yeah, run it. Ooh, I really feel it's my time, think it's my year. Yeah, I really feel it's my time, think it's my year. Yeah, I really feel it's my time, think it's my year. Yeah, I really feel it's my time, think it's my big dog, walking big talk, young veteran, living legend, bet I'm better than them. This is my ship, I'm a jacket like Letterman, y'all but not let them in. They gon' rotate this, so I keep the pedaling, started a chain. The cycle is heaven sent, this is from God, but I'm not your reverend, not in the pulpit. I'm a pit bull in this element, yeah. Say you gon' pull up, then settle it, yeah. I've been married to this hustle, this is my ring, watch I step in it, yeah. And I ain't even got a yard, but I'ma get it here. Watch I touch down, pulling plans out the clutch. Everybody getting crushed, the cut down is for us now. Have to work something, cause I had nothing in my pocket. Yeah, I did all that. Big plans, partners trying to make profits. Yeah, I did all that. Work, sweat, and tears breaking, even no ends. Yeah, I did all that. Had to make it happen. Putting hours in my practice, I did all that. Yeah, I can't take no loss. Yeah, I don't even know what it costs. I hit the ground, then it go off. Yeah, hit the ground, then it go off. Yeah, I can't take no loss. Yeah, I don't even know what it costs. Yeah, I hit the ground, then it go off. Yeah, hit the ground, then it go off. Yeah, run it. Ooh, I really feel it's my time, think it's my year. Yeah, I really feel it's my time, think it's my year. Yeah, I really feel it's my time, think it's my year. Yeah, I really feel it's my time, think it's my. Yeah.
Yeah, I got money on my phone and money on me. I got all these hoes, but still lonely. They been blowing on that strong, but still so weak. I've been higher than a drone, but still low-key. We been sitting on the floor, they in the nosebleeds. Lately I've been in control, they can't control me. Yeah, they about to get exposed for being so cheap. I've been sticking to the code and I ain't gon' cheat. Yo, grew my hair and took the grill out. Think it's time to put it back in. Trying to get into that big house, turn the crib into the mansion. Needed something with that big bounce. You know I had to hit Jackson. Aaron Rodgers with the quick routes. I'm with the gang, we packing. We on the field at Lambo. Might peel in a Lambo. Running drills in my camo. They know what the M stand for. Still got fam in Hawaii, yeah. Couple fans in the lobby, yeah. Couple grand in my pocket, yeah. Couple grams of wasabi, yeah. Eye it up, no glasses. Light it up, no matches. Wife it up, no ratchets. Might turn my wife to an actress. And we gon' make a movie, no Kim K. Give a fuck about what your friends say. I got money on my phone and money on me. I got all these hoes, but still lonely. They been blowing on that strong, but still so weak. I've been higher than a drone, but still low-key. We been sitting on the floor, they in the nosebleeds. Lately I've been in control, they can't control me. Yeah, they about to get exposed for being so cheap. I've been sticking to the code and I ain't gon' cheat.
I'm just sticking to the code, I keep it so G. She asked me what I smoke, I'm smoking OG. I don't fool with too many, only catch me 4 deep. Gotta stay away from snakes, swear these people so creep. I've been grinding for a minute, many labels so sleep. These rappers drop a song, be hot for about a week. I put Gucci on my toes, I keep some cold feet. I ain't paying for no hoe, you niggas know me. I'm about to body the beat. I keep me a hottie with me. She wanna for a fee. Give me that for free. Keep me some money on me. Smoking the gas, keep. You with me, sheesh. But need OG, keep.
I got money on my phone and money on me. I got all these hoes, but still lonely. They been blowing on that strong, but still so weak. I've been higher than a drone, but still low-key. We've been sitting on the floor, they in the nosebleeds. Lately I've been in control, they can't control me. Yeah, they about to get exposed for being so cheap. I've been sticking to the code and I ain't gon' cheat.
Here we go, at the top of the class on a roll, and it's time to run it up, yeah you know. Maxed out, put the pedal to the floor, ayy, on the road, here we go. Yeah, we winning by a landslide. Never see me coming, I'm a landmine. Yeah, I ain't taking orders in command like, yeah, you about to see me on demand like, you know on demand. If you ain't know, you about to understand. Yeah, I got the team by my side, right hand. Yeah, take it to a string, you ain't seen it like that. Yeah, and it's the dream, and we coming for the bag. Yeah, and we ain't never going back now. Future expedited, now we on the fast track now. They won't lend a hand, now they see us on the map now. It's time to act out. Here we go, at the top of the class on a roll, and it's time to run it up, yeah you know. Maxed out, put the pedal to the floor, ayy, on the road, here we go, yeah, at the top of the class on a roll, ayy, and it's time to run it up, yeah, you know, yeah, maxed out, put the pedal to the floor, yeah, on the road, here we go, here we go. Here we go, at the top of the class on a roll, and it's time to run it up, yeah you know. Maxed out, put the pedal to the floor, ayy, on the road, here we go, yeah, at the top of the class on a roll, ayy, and it's time to run it up, yeah you know, yeah, maxed out, put the pedal to the floor, yeah, on the road, here we go, here we go. Here we go. On a roll, here we go, here we go.
What is going on, everybody? Welcome back to the Frankie Candles live stream every single weekday right here at usually 5:45 p.m. Eastern Standard Time. But we got FOMC, guys. Figured I'd live stream it as Bitcoin sits at the decision-making mark here at massive resistance, the POC of the range. You guys know about the 97K resistance zone that we've been looking at for quite some time. We look for that retracement up to 97K. We're sitting there right now. What is going to happen? Are we about to put in a macro lower high and see a lot more pain for the market? Or are we going to see maybe a small pullback, a little bit of a bounce? What is going to happen, guys, as we test this key level of resistance? I'm going to break down the charts for you, show you all the key levels that I'm watching, and kind of what I'm expecting here out of Bitcoin, as we do have some potential. If you guys watched the live stream last night, you will know we were looking at that 8-hour green dot with our 30-minute money flow crossover into the green, anticipating that push up to higher prices. That's where we sit right now. And we did get the 12 and 16-hour to follow right behind that. And now we also have a daily green dot money flow coming up on the 80-minute. Are we going to see another market cipher B 116th bullish setup play out here, or are we going to put in that lower high and come to the downside, guys? Because this is an absolute critical level for Bitcoin. So we're going to break down the charts for the CandleMafia. Thank you guys for being here. I appreciate every single one of you guys. Let's see. We got Dar saying 100 to 101K. Yeah, we're going to take a look at those higher levels. That would be, to be honest, guys, $98,300 is the last level that we have in this zone before really $100,000. So that is definitely in the cards. I'm going to show you guys kind of where the liquidity is sitting and what we're going to be expecting here. Shout out to Nirvana in the chat. We got Satoshi Glakamoto. What is going on? We got Italian Dutch said, brother, the weekly lower high starts today. All longs will get shot out of the market in an instance. Yeah. Shout out to Italian Dutch. Shout out to my fellow Italiano there. But yeah, shout out to you, bro. Yeah, this is 100%. One of the biggest reasons this level is so key is because it is our macro golden pocket retracement, which is a high probability area to be looking for a lower high to come in at. And we've been looking for that to potentially be the case all the way down when we were at 75K. So are we going to see it play out? Are we going to see the market turn around? We're going to cover it all for you guys. So shout out to the CandleMafia. Thank you guys for being here. Don't forget to smash that like button. It's the easiest and most free way to push us out here outside of our normal stream time. So we're going to need that help getting pushed out. So smash that like button. We don't care how many times you do it as long as it's an odd number. But without further ado, let's go ahead and jump on into the charts. Let's get into it. All right, guys. So obviously, we're here. Right? We've been here for a little while. Massive, massive level of resistance. And again, for anybody who's new or may have not been watching the streams until maybe today, I don't know. But this is a level that we've been watching ever since we came down and put these massive bullish divergences into our key naked point of control or weekly naked point of control. We looked for that big retracement. We knew once we broke above our massive trend line here, we were going to be looking for that very likely retracement into a very key level of resistance, which is right here. And why were we even targeting this level, guys? Well, it has to do with the fact that it was that macro golden pocket retracement. And when we looked at those higher time frames, at least at the time, we have seen money flow come up a little bit here on some of these time frames, but kind of the thought process, shout out to Italian, I don't know the full name, but shout out to the Italiano guy. But yeah, shout out to you, man. This has been a big, big level. If we are going to be looking for macro lower highs and lower lows to come, this would very likely be the first major level that has a high probability of happening at, right? Just based off our Fibonacci retracements, whether we're trading the 5-minute, the 15-minute, the 30-minute, the 5-hour, the 2-day, it doesn't matter. Those Fibonacci retracements are typically where we look for those lower highs, and we are just simply sitting in that resistance zone, guys. Now, the flip side to that coin is obviously, I mean, not only do we have the golden pocket, we have a ton of horizontal resistance in that level as well, but the kind of flip side of that is, listen, things can change, right? Just because we have a golden pocket here does not guarantee 100% that we are going to see that lower low, although 100% a scenario we can see play out here. And one of those things that we've been looking at are the higher time frame money flow to indicate whether this is going to be a likely lower high. And you can see a lot of this money flow has tried to come back to the upside. It doesn't completely invalidate the lower high, but just to kind of point out why that's such a pinnacle level, and I've been talking about it for the past week, ever since we were at 75K. So we've been talking about it forever, but I just want to reiterate why that is such a key level of resistance. It's not just the strength of those horizontal levels. It's kind of the context based off the Fibonacci retracements, and it is nice to see money flow try to come up here a little bit. That that's better than nothing, right? For a potential fake out to come here. Now, as you guys know, if we do get rejected here, overall with our daily money flow being in the green like it is right here, you can see we do have that fresh green dot on the daily as well. We do have bullish signs. We also have some local lower time frame bearish signs here. So I'll be honest, guys, especially with FOMC, this is a very dangerous place to be like hunting for new trades. I am still holding my short from the top here, but I was telling the premium Discord earlier, like, listen, if I was not already holding my short from the top, I probably would have, I would kind of be sitting out to see what happens here, because again, we have the bearish signs that I'm going to show you. We have the bullish signs here on the daily, and again, just in general, pivotal level in the market here, because even if we do get the rejection, we're hoping to hold some of these local key levels of support. 91K would be very, very nice, because as this money flow is in the green on the daily, we do have to anticipate any pullbacks to be lackluster within the context of that daily time frame for potential higher lows and higher highs to come. But again, with this strong resistance, the flip side of that, guys, is if we could crack above that level and finally start flipping this stuff to support, that's where I am feeling pretty good for at least a move up to 102 to 103K, if not potentially even new all-time highs. But again, we have this giant brick to get through, or I should say brick wall. So definitely a very, very big decision time here for Bitcoin. And again, yesterday, if you watched the live stream, you will know that we were looking at a very specific signal here on Market Cypher B, being the 8-hour green dot printing with our 30-minute money flow crossover into the green. We talked about it literally in the beginning of the live stream. Yeah, we literally talked about that in the beginning of the live stream, looking for the potential crossover into the green on the 30-minute to indicate that we are going to get a bigger continuation to the upside. And then literally as we moved in through the stream, we saw that play out in real time. We got the push to the upside, and then we also had the 12 and 16-hour green dots follow up behind it. And now, guys, we go from the 8-hour and the 30-minute as the bullish Market Cypher B setup, which gave us that push to the upside last night on the live stream. And then we look to that 12 and 16 hour as kind of the next step up in time frames to see if that same signal is going to play out. We did wind up seeing that happen. We had the 16-hour green dot. Come on. We had the 45-minute money flow crossover, but we're kind of just consolidating here. But the reason I bring that up is because if we come on over to the daily here, guys, we now have a green dot on the daily. And if we have that green dot on the daily, what is the Market Cypher B116 setup for the daily? It's going to be that 90-minute and 80-minute money flow crossing over into the green. And if we hop on down to that 90-minute, It does look like we are trying to come to the upside here. And if we jump down one more time frame to the 80-minute, you could see that we are potentially seeing this money flow come up on the 80-minute. Now, obviously, this is FOMC. I would say if there's a time for any kind of signal to get stepped on, the FOMC days are probably those days. So, this is on the chart. That is a potentially bullish sign, especially after following up after an 8-hour green dot with the 30-minute money flow crossover with the 16 and the 12-hour as well. We're just kind of leaking into those higher time frames. So hopefully the bullish hope here would be that daily green dot and the 90-minute money flow crossover will play out. But again, that daily green dot is not confirmed yet. Obviously, we have to wait for the daily close for that. So this can disappear. And again, with FOMC, we could see some crazy turbulence here. So, it really is a crazy moment for Bitcoin. Massive resistance. However, also the doorway up to massively higher prices. We have bullish signs on the daily. And now, I got to cover the bearish case as well, guys. Obviously, other than the fact that this is massive resistance, contextually as well as just, horizontal level-wise, very strong resistance, very important key level, potentially giving us a bigger pivot to the downside. However, with that daily green dot 90-minute money flow crossover, it looks pretty decent, again, for a potential, even if we do cool off, we could look for higher lows and higher highs. However, if we come on over to the 4-hour time frame, you guys can see here, VWAP coming to the downside here, as if I pull up some of these local levels we were watching yesterday, I'll hide the... Let me come on over to our main chart here. And we'll pull up the scalp range that we were looking at yesterday. Obviously, this is the context we were looking at yesterday. We had bull divs into the golden pocket, and then we had that 30-minute, 8-hour play out, giving us that push to the upside. But this right here, guys, this 786 is really the invalidation, in my opinion, for at least the local downtrend to continue, right? We could easily push up to our daily naked point of control that we've been watching forever, sitting at 98,300. I'm pretty sick of saying that number. But, that is our last level of defense, or I shouldn't say defense. It's like our last level of resistance before potentially $100,000. However, locally here, if we are going to continue our local downtrend, we are fighting this 786 Fibonacci retracement. And if we are able to break above that 786, daily naked point of control, hold it as support. This will be the invalidation of this local lower high. And at that point, flipping this level again, 97K, holding that as support, I would be anticipating the daily naked point of control at 98.3. And this would probably be like the last time that I don't want to say that, right? Because we're always looking for shorts locally. So I don't want to say it's the last time I'm looking for a short, but this is really that last level before we are going to likely shoot up to $100,000, right? We know we have the liquidity sitting there on the heat map. Also, you have the $100,000 psychological level. I will say this. Yesterday, getting that big push, this is a bullish daily candle for sure, but are they just trying to trap a lot of the longs before sending it back to the downside? So I'll be honest, locally here, guys, it's a bit of a hit or miss here on FOMC. I would say very, very, very sketchy trading environment. I would say almost 50-50 at this point looking for new trades, but technically that 786, if we do reject there, it would make a lot of sense, but again, clear invalidation there. We get above that 786, I'm looking up towards about 98.3, and then if we don't get the bigger rejection there, sure, we could potentially look for some scalps there. But if we do flip that to support, I would say 100K and potentially beyond is likely on the way, right? Because if we look at this on the, looking at that macro resistance, right? That daily at 98.3 is kind of the last end of this major zone of resistance, right? We never know if we're going to get the rejection from the first level, from the second level, right? This is why we trade based off of confirmation, right? If we don't get the confirmation, we don't take the trade. We had a little confirmation here. We came down over the weekend, and then we did get the confirmation down there, giving us that nice drop to the downside. But I will say we did hold that golden pocket with the bullish divergences here, giving us that next push up, right? So that daily and daily naked point of control at 98.3 is really that last zone of resistance, right? If we can, again, that's really the level. Generally the POC is the key level that we want to remain above to see the value area high. Obviously, you go from the value area low. Next likely place for price to go is the POC. We got a little turbulence there, but if we can really flip that 98.3 level, that is literally the end of this resistance. And at that point, we have our $99,500 wick right here, which could still have potentially some liquidity sitting above, which could potentially give us that squeeze up to higher prices. But at the end of the day, flipping that $98,300 level would open the door to 100K and beyond, in my own personal opinion. At that point, you're above the major resistance. You're also potentially above your POC. Maybe we see a little turbulence up there to test the POC a little bit more before going up. But at the end of the day, this is the big zone of resistance to get above, and that last level is 98.3. Again, a level that we've been looking at for quite some time here in the CandleMafia. Crazy how fast things change, right? Like, I felt so crazy looking at this level for so long, and then finally it's like, oh my God, we're here. And now we're talking about potentially either breaking it or, losing it for a lower low. Now, if we do get like a massive dump to the downside, obviously the Fed is going to have a lot to do with this. Maybe it's a nothing burger today. Who knows? Obviously, they are expecting the rates to remain the same. A lot of people are saying surprise cut, surprise cut. I don't know. Surprise cut would be pretty wishful thinking, in my opinion, but it is something you have to be prepared for, right? If they do come in and give us a surprise cut, that is likely going to send that's likely going to send Bitcoin rip into the upside. You would think, right? So yeah, those are like the major macro levels that I'm looking at, right? Huge pinnacle level on Bitcoin, and then locally, I will just talk about some of these lower time frame levels again. We just talked about the potential of getting rejected above the 786. So locally, that's the level to get above the 786 in order to go to 98.3. And then, yeah, we'll see if we can flip that to support as well. But be careful out there, guys, if you're trading. Oh, man, please do not get wrecked. Set a stop loss and understand they're probably going to wreck the longs and the shorts here before it picks a direction either way. Now, if we do get the cool off to the downside, like I said, just generally with the daily money flow crossing into the green, we could still potentially be looking for higher lows and long positions. So I just want to talk about some of those key levels of support down below us. If we do come down from that 786, which again would make sense, we also had some low time frame bearish divergences, not from these highs, right? But locally here, we came down, broke above the 786, back down, tested the bottom of the golden pocket, back up, and now we're kind of getting stuck under the 786. And we do have some bearish divergences here on the lower time frames. Come over to the 15-minute, right? Higher highs on our price action. Come on, market cipher B. Lower highs on our momentum waves. Money flow trying to come into the red here. And the reason I am paying attention to this is just simply because we do potentially have the 4-hour red dot looking to print. If we see that 4-hour red dot print and the 15-minute money flow crosses into the red, that is typically an indication that at least that 15-minute trend will continue to the downside. If that is the case, key support here at our previous value area high that we were, of the range that we were just kind of sitting in locally. Value area high, golden pocket, confluence, sitting between, I'm looking at this zone between about 95,350 and 95,679. So if we do wind up losing this golden pocket, at this point, once you lose this golden pocket, you're losing a few key local levels, right? You're pretty much losing the value area low of this little local range that we have right here. If we pull this, right, you're essentially getting pretty close to that value area low. So once you get rejected out of there, if you lose that range, you're very likely going to get sucked down towards that previous area of balance. Again, sitting at the value area high of the previous range, 95,679, down to 95,353. And then at that point, right, if we start getting stuck under this range, right, this value area high, this is kind of where you want to bounce locally, because if we don't bounce there, you could get stuck inside the value, and then that would call for the bigger rotation down towards 92 or 92,800 towards our local value area low. And so this is just kind of the local range that I'm looking at, right? We deviate above the range, right? We deviate above. Get the bearish confirmations, took the short from the top, wrote it back down. We knew if we lost this value area high, it was going to be very probable to at least make it back down to our POC. And then we tried to get stuck underneath this POC to go for the value area low, but we did not make it to that value area low. But you might ask yourself, well, Frankie, what the heck happened there? Usually the volume profiles slap like crazy. Well, if you pull back to our previous value area here that we were originally looking at, you could see, right, typically I will draw these volume profiles from previous areas of value, because when you mark out the value areas, you want to mark out the areas of balance, right? You don't always want to incorporate the imbalance until you come back down into the range. But I always keep an eye on the previous and current volume profiles, and you can see here, we did indeed get the deviation above the high, pull back down to the value area high, we bounce off it. Once we get accepted in, POC, and we did go down to that local or previous value area low before getting the bullish divergences and the bounce back out. So this is the two local ranges that I'm looking at, previous balance right here, and then to the current price, that does bring us that, value area high at about 95,600, right? 95,594. So that's going to be the key level, right? So we don't really want to get stuck under this level. I would say, especially if you lose the POC, very likely we come back down to that current value area low, sitting at about 92.8. Once we start losing that level, I will say, right, that's where we're just going to go, hey, let's pull up the higher time frames here. Look at the previous value area. And, $91,000. I would say, like, the big targets, the if this, then that, is like if we get a bigger rejection from here, are we going back to 91K? This would be a huge pivotal moment for Bitcoin, just like it is up here, because once you start losing this, we start playing around with some risky levels. And, once we lose 88,500, if you guys watch the stream, you'll know this. Once we lose 88.5, I'm going to be looking down for lower prices on Bitcoin. But, 91K, or are we going to 100K, I would say, right? Because if we break above resistance, I would say 100 to 102 and 103 is the next stop, because you're just looking at this as a volume profile, value area low, POC, little bit of turbulence. Once we flip that to support, the next likely place for price to go is going to be that value area high. And once you flip the golden pocket, you're going to be looking up towards that 786, and those levels are confluent up there as well. And then again, if this does wind up, giving us extra resistance, we get the big pullback, the big levels, like the big swing levels I'll be looking at, still down here at about 91K, previous value area low, and then up here at the value area high. Very simple, right? And there's a lot of intermediary levels, a lot of local levels, but you never want to kind of lose the view of your just overall simple volume profile, right? The reason I feel good about Bitcoin right now, again, unless we get the rejection from the PLC, it's why this level is so important. But at the end of the day, like, we're inside our area of balance here. As long as we can stay in this range, doorway does remain open to potentially flip this and come up to the value area high. I'm not worried about Bitcoin until not this value area low at 91K, but really until we lose the current value area low at 89.5. This is where I start to think, really got to start bouncing here, right? Because once we get accepted into this lower value, I'm viewing that, 88.5 as the key level to indicate that we're probably going down lower on Bitcoin potentially. And once we break 88.5, guys, the probabilities of putting a lower low in here below $75,000, I wouldn't say it's the line in the sand that calls for it, as I said last night, but I would say losing 88.5 does increase the possibilities or probabilities of coming down and putting in a macro lower low. So those are all the key levels, 91 or 100K. What are we going to do? And then locally, we have the 98.3 daily naked point of control. And then, yeah, we'll see what happens here for FOMC. Bada boom. Let me come in and check in on chat really quick. Let's see. At Tony D. Tony D, could you super chat the rate decision? Because usually you can get it faster than I can if you're here. I think he is. I mean, I'm sure he is here. But if you hear me, Tony, if you hear me, just let me know. You don't have to super chat me, but just let me know. Pop it in there once you get it. Let's see. Bada boom, bada bing. What would happen if a rate hike happens? Yikes. If, shout out to Hugo said Frankie takes an emergency vacation. Shout out to Hugo's. Yes, sir, planning on it. Okay, shout out to Tony D. I figured. Thank you for that. I appreciate you. But yeah, if they, listen, if they raise rates, I think, listen, the predictions are usually like right 99% of the time, right? So chances are very likely they'll just leave it the same. But if it was any surprise in either direction is going to be pretty bad, or pretty good, or either really good or really bad, right? If they just randomly cut rates, I would expect some kind of a massive rip up, right? And then, then you have to deal with the fact that it's like, people sometimes like, you'll get the pump and then you get a massive dump. And then tomorrow it's like, what happened? We pumped and dumped, right? But, emergency cut, not emergency cut. Just a random cut would be extremely bullish, and then a random cut, and then a random raise of rates would be very, very bearish, which would probably give us the bigger cool-offs, right? And then we'll assess the situation as we come down to these key levels. Listen, if we get the dump down to 91K and it looks like garbage, doesn't mean that we have, just because this is our next major key level, or 89.5 really being that kind of last line of defense, it doesn't mean we have to hold this, right? If like money flow's coming out on the daily, things are bearish here, hey, maybe our short from the top winds up paying us out big time. So yeah, we'll see what happens here. Probably gonna get pretty crazy. Let's see. Jerome always dumps us. Bro. The golden macro is looking sublime, though. Yeah, shout out to Roger. And listen, guys, I will say my overall stance on Bitcoin, just from a high time frame perspective, remains exactly the same, guys. Like, I've been saying this ever since, it always happens, right? And once you spend a little bit of time in the market, you're able to more easily identify this stuff. What happens here, and I actually want to talk about this area right here before we came into new all-time highs, because we are in a interesting situation here. But the, we come down here, everyone's like, oh, like August 5th was the last time I got a lot of DMs. Oh my God, Frankie, is this the bear market? I need to know. Oh my God, are we going to go down? Like, what do I do, right? In which case, down here, did not think it was the bear market, right? This is just a healthy correction within a bull market. We see these all the time. Continuation up to all-time highs. Same thing down here. Now, this does not mean we can't put in a lower low. If we put in a lower low, like my sentiment probably won't really change much either. But it would be a much more brutal path to take, right? But I will just say this, right? Everybody thought this was the bear market, right? It was crazy. Like, I couldn't believe it. I'm like, guys, it's not even that bad, right? It's like a 33% correction in a bull market is very likely, or very common rather. And, just overall, right? This is bullish market structure. Like, I don't know, when you just look at basic market structure. Now, again, this doesn't mean that the top is not in at 110K. It could be, right? Like, anything is possible. And, I've been around long enough to understand that. And, but for me personally, right? Like, I was not bearish here, right? Now, bearish may be looking for a lower level, but not calling for a bear market, not thinking everything is over, because there really was no reason to think that, right? But we got the bounce off our level, and we came into this big retracement. And this is really, again, like such an important moment, and kind of annoying, right? Because even if we do get the bigger pullback and put a lower low, we do still have very, very key levels below us that we could still put another macro higher low in at, and put in another higher low at, and put in another higher high, right? We have our macro golden pocket sitting down there at $72,000 to $70,000. This is 100% a level that, if tested, could give us a higher low before new all-time highs if we don't get it the more bullish scenario to play out like we're looking at right now. So yeah, definitely a wild time for Bitcoin right now. So, again, even if we do get the bigger cool off, guys, like generally, like I do not think the bull run is over. Again, that doesn't mean that you should just take that at face value and just, not sell your bags, right? If you thought, I've said this many times, if you thought this was the bear market, I wouldn't change your sentiment, right? Just because I don't think it's the bear market, right, does not mean that this cannot be the lower high before, the bear market begins. I don't fall in that camp, but if you thought this was the bear market, right, you should be so thankful, right, that we came up to this level that you could sell your bags, right? But that's not what most people will do. Most people will be like, oh, wait, never mind. It's not a bear market. It's a bull market because we're pumping, right? And just be careful about that. But that's not the camp that I fall into. And again, even if we make a lower low here, it could still get the big bounce from there, right? It's very hard to predict exactly how this will play out long term. But yeah, we'll have to see kind of what happens here. And, things change very fast in crypto, guys. We get a rate cut or, things change very quickly. Just understand that, right? We just, even on this move here, we get a, sizable 30% move, right? Nothing crazy for Bitcoin, right? We've seen Bitcoin do much bigger than that, but it's like, oh my God, bear market. Now everyone's super bullish. And I will say, that big candle to the upside yesterday, are they trying to funnel in a lot of longs here to then just wreck them back to the downside? It could potentially be the case. And if we take a look here at the heat maps real quick, I will just say we have developed now a lot of liquidity down below. So yeah, this hotspot of liquidity does sit between about 92.8, leading us all the way down to about 92K. I mean, even 91.5, it kind of brings us all the way down to that $92,000 to $91,000 zone, which we all know is going to be the value area low of our previous volume profile. So again, part of the reason why I like this level for a bounce is like, hey, maybe we do want to wash out some of those longs before finally getting the bigger move up. And we've seen this happen many a times, where you kind of come up, test the POC, come back down to test the value area low, and then you get the full rotation. That does, sometimes happen. I could even like pull this volume profile right here and see. Let's see. Yeah, like here, we talked about this last night, right? Like you get into the value area low, you push up towards the POC. You didn't quite touch it. Maybe the current POC was sitting there. But you reject the middle of the range. You come down, test the value area low, and then you finally get that full rotation of the range and then the breakout. It does remind me, this bottom, we've been comparing this a lot here lately on the live stream. This kind of bottom right here is reminding me a lot of what we have going on here, right? We had the 2-day bullish divergences come in right here. We got a big retracement, right? And then we got the cool off into our golden pocket 786 before putting in a higher low and continuing up. That golden pocket 786 zone would bring us down to about 83K. I'm sorry. So it just does remind me of this. The question is, are we here or are we here, right? And those are the two big things, right? Because if we're closer like to up here, it would be more of a situation, in my opinion, where you kind of hold the macro volume profiles, come back up to the high. If we get the bigger retracement down to the golden pocket or 786, that does sit right here. I'll make the chart bigger so you guys can actually see what we're doing here. Right, that would bring us closer down to about 93.2 or 93.3. 83.3, all the way down to the 786, which sits at about 79K. But again, like I said, once we get below this value area high locally, this previous value area high at about 88.5, chances of the lower low become much more likely. Not impossible to bounce here. That's why I say just higher probabilities of a lower high, not the line in the sand, lower low. Not the line in the sand to say now we're going to make a lower low, but the chances do increase. And the reason for it not just being the simple line in the sand to call for the lower low is because, again, if we're going to put in something like we saw in back here in September, right, you could go down for that full 786 retracement, which technically I wouldn't like this as much. I don't want to retrace all of this move to put in a higher low and continue up, but it's not impossible, right? And these levels are going to be where you're looking for those higher lows. But again, I would much prefer to either bounce off 91K or the 89.5 to 88.5 zone, right? So, hopefully we don't have to deal with that. Again, I really don't want to lose 88.5. I just want to be very clear about that. So yeah, that's kind of the situation that we're sitting in right now, guys. Let me come back into chat and let me just check in our chat real quick. Let's see. Bada boom, bada bing. Shout out to Aziz said, Frankie, based on history, do you think it makes sense to come down after this massive 30% pump like usual? Yeah, I mean, listen, when I look at the charts, right, we just have to take the information that we're given, right? And right now we have the daily green dot, 90-minute money flow crossover into the green, or looking to cross over into the green. We have the daily money flow in the green. This indicates that the trend, based off the time frame we're looking at, which is the daily here, will likely continue to the upside as long as this money flow stays in the green, right? So that gives me the idea that, like, sure, a cool off is definitely possible. But again, this is not guaranteed, right? We could potentially just squeeze up here and just push. But it's these are the mixed signals that we're seeing. We have the green dot with the 90-minute coming up, 90-minute money flow coming up. But we also have the 4-hour red dot looking to print which looks like it's probably looking to print pretty soon here. Red dot looking to print on the 4-hour, and then the 15-minute money flow also coming into the red here, right? This would be a shorter time frame confirmation, right? So you could still see this 15-minute, 4-hour bearish scenario play out and still get the daily to play out bullishly, right? Because again, maybe that 4-hour, 15-minute, if it starts a bigger downtrend, will be the lackluster pullback, right, to put in a higher low on the higher time frames for the continuation up, which the daily could be potentially calling for. So the 4-hour, 15-minute might be able to cool you off. And again, it's not like that doesn't necessarily have to be what happens, right? But if we do see the cool off, it would not invalidate the daily bias here, in my opinion. And I don't mean like the bias for the day. I mean like the bias based off the daily time frame, the higher time frame context. So yeah, I mean, I would say just in general, bigger pullback, daily money flow stays in the green. We could see something like that. Small pullbacks, we could look at those local levels. Maybe we bounce off that local value area high that I just showed you guys. And then, in the most bullish scenario, maybe we just, squeeze up, flip this to support, and then push up to higher prices. Like I said, if I was not holding my short from the top here, I'd probably be sitting on my hands to at least 98.3 to look for a new short. And even then, I would be pretty careful for a potential squeeze to the upside, especially with the way that daily looks. So very, very interesting. Shout out to Jesse. When Lambo candle? Lambo candle if we get a surprise cut. If we get a surprise cut, probably a pretty high probability of just a massive green pickle. Let's see. Bada boom, bada bing. I heard Frankie say 100K. Win Lambo. Shout out to Kalia. Let's go, baby. 120K end of month. I mean, listen. We also have the Trump announcement, whatever that's going to be. Listen. At the end of the day, if we do, again, if we break above 97K, I feel very good for all-time highs, right? And again, we're going to pay attention to all the resistance above, but we're going to be feeling, really good, much better about new all-time highs than we are right now, right? Get above the macro resistance. At that point, right, like value area high is very likely 102, 103K, and that just opens up the door really to all-time highs, to be quite honest. Now, what are the targets for the all-time highs? I'm going to pull this local Fibonacci extension here. 118 to 124K would likely be a pretty decent local target to the upside, up to about 131K. And then the macro targets, if you're not trying to pay attention to like all the, where we're going to stall out, I'd say between, I won't even go there yet, right? We'll just say between 118 and 124,500. That could be like a big target to the upside if we see some kind of like, some crazy thing happen. Maybe the announcement's super bullish. Maybe, maybe if we got a surprise rate cut, who knows, right? But yeah, that would definitely be, not impossible. Not impossible. It really depends on what happens here. With the Fed. Let's see. Still huge liquidity above. Yeah, above $99,000. Like, yeah, you have to be careful, right? Actually, someone brought this up on the live stream. Right above about $99,500, guys, we do have a massive level of liquidity. So I'll just mark that off here on the chart, right? If we start cracking above 99.5, you're going to deal with a lot of FOMO longs. You're also going to potentially deal with a lot of people who are short from up here, getting stopped out or liquidated. And when we do look at the liquidation heat map, let me pull this up on a higher time frame. Let's pull it up on like maybe the 3-month. You guys can see here, if this loads up, bada boom, bada bing. Come on, baby. There we go, right? Massive liquidity up here, 99.5, leading, again, into basically the value area high around 102 to 103K. Now, somebody brought this up on the live stream recently and was saying, like, doesn't it make sense that a lot of people will exit their positions on the way down, so that liquidity could be less, right? And that is 100% true, right? So these I say this all the time, the liquidation heat maps don't really update in real time. So you have to understand that, like, it might not be as significant of a level this long after, coming all the way down and then coming all the way back up. All those positions might not still be open. So that liquidity, although it is on the heat map, definitely a big level, it could be, not as significant as it once was. But, traditionally, if you're looking at a liquidation level like that, you would say to yourself, well, hey, if you break above 99.5, this is where you could start to see the squeeze to the upside with a massive, massive pump up, an aggressive pump up. And that's what a short squeeze actually is, right? It's not just, a lot of people always say short squeeze on just like random pumps to the upside when it's not really a short squeeze. That would be kind of more of a short squeeze situation, right? But yeah, assuming that liquidity is still sitting there. So that's why I say, you get above 98.3, you're flying into the hundreds if you start cracking into that liquidity. Again, assuming it's there. So yeah, other than that, let's check some of these other time frames. Yeah, 5-hour red dot looking to print, 6-hour red dot looking to print. I would just say locally, right? Daily green dot 90-minute money flow crossover looks pretty good. But if the 4-hour and 15-minute plays out, these 5, 6, maybe even 8-hour red dots print first. And again, FOMC can really wonk out the indicator sometimes. So again, very volatile today. Be very careful out there, guys. But I would say like shorter term, right? If I had to pick, I'd say these time frames, if they print the red dots, are likely to play out first for a correction. But again, we'll have to see what happens, right? Because if we just start pumping here, these VWAPs are just going to crank to the upside. So these are not on the chart yet, but we can potentially use these to front run, right? But when you front run, you have an opportunity of potentially being wrong and not getting the signal you were looking for. So yeah, I mean, 4-hour VWAP coming down, 15-minute money flow coming out. Let's check the 30-minute money flow real quick. Man, it's coming up. Choppy today, guys. Definitely, I would expect a lot of chop. I mean, that's FOMC for you. So yeah, I mean, we'll see. I mean, 4-hour money flow crossed over into the red yesterday. Now it's back in the green. 5-hour money flow was in the red. Now it's back in the. Then it was back in the green. Now it's back in the red. So yeah, we're definitely getting 6 hours, kind of the only one right now, kind of cleanly continuing to the downside. But we'll see what happens here. We'll see what happens. Let's see. Small downside and a move up. That would make sense to me. Let's see. Shout out to Jet, said, I don't understand how BTC is still low over a year post-halving. Shout out to Jets. I think this just has to do with the fact that a lot of people just lean on the 4-year cycle, and which is great, right? The 4-year cycle has helped us predict a lot of stuff in the market by just analyzing history and expecting it to at least be similar, and that's been very, very useful, right? But what a lot of people don't kind of take into account is that the 4-year cycle is not provably the only thing that moves Bitcoin, right? Like Bitcoin and crypto in general tracks traditional finance, and the macroeconomic situation is really what controls this stuff. It's just a risk-on asset at the end of the day. So, if you don't have the same conditions that were met for a massive bull run in a previous cycle, like it's not just the 4-year, it's not just the halving and the timing, like, 1.5 years after the halving, you do this, right? Now that's good to look at and potentially use as a additional piece of information, but it doesn't mean that it's going to follow that cycle perfectly if the macroeconomic situation doesn't line up, right? We've had massive stock market rallies. The Russell 2000, which is pretty much like the altcoin market for stocks, that's usually ripping to the upside in bull markets. We just haven't seen a lot of those conditions met this cycle, which doesn't mean they're not going to come. It just, it could throw off the timing a little bit, and it makes sense, right? Because history doesn't always repeat, but it oftentimes rhymes. So hopefully that helps you out. Let's see. Bada boom, bada bing. Let's see. Shout out to Jay Burke, said, I was just asking a question. Are you the one that just asked about the halving? Hopefully that helps you out. I think that is, oh no, was that Jets? Oh no, it was Jay Burke. But let's see. Good job, Zada gives Powell the green light to keep rates higher for longer. Oh boy. Send it to 0. We're short from the top, baby. Send it to 0. Fox 3 says, big FU candle coming for Bitcoin. Let's go. I'll be honest with you guys. I don't really have my personal emotional bias, right? Like my want from the market right now. It's just go higher, man. Just get this thing exciting again. Please, for the love of God. Please don't put us. I'll tell you this, guys. If we go make another lower low, good Lord, the sentiment. Imagine this. Typical 33% correction, cool off in a bull market, which do oftentimes lead to higher highs, right? People were freaking out here. Sentiment was miserable down here. So depressing. And you could just tell, right? Like just on Twitter, like everyone gets bitter. Like no one likes when price is doing that. But, think about this. If you thought sentiment was bad down here, imagine if we come down and put in a lower low, right? And again, is that the start of the bear market? We'll have to take the information as it comes. But, at the end of the day, chances are people are going to be like, oh, my God, oh, come on. And then they're going to be super bearish here, which would make a lot of sense to just, wreck everybody. But again, we're pretty far away from these levels right now. So as long as we remain within this volume profile, the volume profiles oftentimes lead the way, guys. So until we start losing these volume profiles up here, we don't have to really worry about that just yet. The only reason I bring that up is because, if we do put in a lower low, this has been the level that has a high probability of being that level, right? If we're going to put in the lower low, this is typically where they start to come in, right? Either between the golden pocket and the 786, but because of the POC being in here, because of all the other resistance we have in here, I would be less confident of the lower high coming in here, right? Again, technically between the golden pocket and the 786 is that zone for the, once you get above this 786, that really invalidates the idea of the lower high coming in, the way I look at the charts. But because of the significance of this resistance, once we get above that, I wouldn't, I'd be more worried here than I am here. And again, we will look for the lower high here in case it does come in, but, I would pretty much get above here. I'm feeling pretty good. So yeah. Let's see. The social sentiment here, right? retail, Bitcoin search term analytics, right? All was skyrocketing here. And then when we made the higher high, what were the social analytics doing? They were making a lower high. There was so much less interest here than there was here, which is a bearish divergence if you think about it, right? Price is going up, but there's less interest, essentially, right? And that was a big, big, big thing. So I always say this was really the true all-time high of this cycle, right? This was really just like an inflated dead cat bounce to sweep liquidity and then send it into the bear market. And we are not, as far as I know, right? Like, we never really got that crazy retail. We had retail, like, come in and take a peek, right? But we really haven't seen that, like, real explosion of interest just yet, in my opinion. So I would say retail's really not truly back yet, even on the exciting points, right? Like, it never got to the levels that it was in 2021. Let's see. Yeah, 100K is 100%. Shout out to World, says a big psychological number, 100%. Shout out to Gen Z, says hashtag value. What is going on, bro? Welcome in, Gen Z. Good to see you in here. Goldavelli says retail doesn't have any money. Yeah. Makes sense, right? It totally makes sense. Dump it, baby. Dump it. Oh, baby. She's pushing down. She's pushing down, guys. Let me pull up the local levels here real quick. Bada boom. Yeah. So 96.2. This is another bit, we're coming down to key support. If we lose this, I'm looking down here 95.630. See if we can crack it. This is also 96.2 is also our weekly naked point of control that we looked at yesterday, right? Saying like, hey guys, if we do get the pop up, this is going to be a big level. We broke above it, tapped it as support, tried to put in a higher high, we put in the lower high, and now this would be a decent level to hold, right? But if we lose this, I would say probably headed down here. And then again, acceptance into this range would be pretty bearish in my opinion, for at least a continuation down towards the POC. So we'll see if we can break this level. Let's go ahead and put on alert here real quick, just in case we move to a different chart. Let's see. Let me scroll it, make sure I didn't miss anything. Some levels for SUI. We could try to take a look at SUI real quick. I got that alert set on Bitcoin, so we'll jump right back over if we have to. Ooh, Ethereum getting the dumpski here. Yeah, I mean, look at this, right? Ethereum back inside its local profile, right? So very similarly, right? Top out here. Get accepted into the value area high. POC is next. If we get stuck under this POC, value area low might be next for Ethereum, right? Local value area low. 1761. Nothing we haven't seen, recently. I don't want to scare anybody, right? Like zoomed in like that. It's like, oh my God, we had yellow X's. We're dumping, right? Which is true, but just to put that in context, right? Like this is a local range within a local range, right? Like the bigger volume profile here on Ethereum is going to be the bear market range, right? So like even if we cool off, we're still above that POC. But yeah, locally, I would say, for Ethereum, just to give some quick levels here. Whoops. Come on. Yeah, I would say lose this POC at about 1800, get stuck underneath, probably value area low. And again, like the volume profile is just giving you the beautiful guide here on price. Bull divs into the value area low. Stay above the low. Next likely place for price to go is going to be the POC. Flip the POC, value area high. Deviation above. This is your overvalued asset. Within the value area is your fair price for Bitcoin. Once you get above, that's overvalued. This is where you want to look for shorts. And then once you get accepted back into the range, high probability of revisiting the POC. Once you lose the POC, the walls of the volume profile state. Next likely place for price to go, going to be that value area low, 1750. Or 1760, I'm sorry. So there you go. Just quick little rundown on ETH. As I just pulled that up randomly and saw the little pullback. So there you go. That's what I'd be looking at on Ethereum real quick. But let's take a quick look at SUI. Let's see here. Bada boom. Okay, so yeah, on SUI, re-update that. I think this fib is still valid. Yeah. So, key support on SUI right now, I would be looking right here. And this is going to be I believe, daily naked point of control. Value area low, 786 Fibonacci retracement. Let's make sure I'm not missing a level there. Okay, so this zone right here between about $3.13 and $3.06 would be your first major key level of support. Your value area low, you do have confluence in there with a local 786 and the daily naked point of control. So this would just naturally be an area to be looking for support. If you lose this level, right, like structurally, a lot of this stuff looks the same because you have these like little consolidation ranges down below, and then we've broken into bigger value areas. Same thing on Bitcoin, right? Like structurally, like fractally, this looks very similar. You have your lower range, you get the breakout, you're back inside your upper profile. So just naturally, that value value area low is going to be key support. And these are the same levels we looked at on live stream the past 2 days, $3.13 down to about $3 even. And then if we lose that daily naked point of control at $3, that's a psychological level. I would say for sure the next key level to watch would be between 281 and 268, right? Because we have the golden pocket there, the value area high of the previous range, which is really what you want to stay above, because just like on Bitcoin, if you get accepted below that value area high, it could open the door to rotate through the entire profile. And there will be local support to look at here, on the way down, but just in general, volume profile theory would state, get stuck below the value area high, POC is likely next, then the value area low, right? We look at this every single day, not just on SUI, but on everything, right? So that's just kind of the context there. So value area high, golden pocket, and your anchored VWAP all the way from the bottom of the downtrend, right? All the way from the low, right? So this would be very, very nice support to hold, right? These anchored VWAPs can end up being very, very, very strong. So yeah, that's what I've been looking at on SUI. As far as market cipher, again, with FOMC, these things can get chopped up a little bit on volatile days like this, but just in general, 4-hour red dot is printing similar to Bitcoin. Is that 4-hour red dot printed on Bitcoin, just yet? Look at that. Bounce right off the key support. POC of that previous range. Let me see here. Where's that 4-hour? Yeah, 4-hour red dot, very close to printing, but we have the 4-hour red dot on SUI. Let's check that 15-minute money flow, already in the red, and you can see here, even just locally, even if you don't continue down here, that 4-hour money flow crossover gives you that continuation down. You break the range low, and then you get the continuation down off that money flow crossover. So yeah, that's what I'd be looking at on SUI. Let me come on over. Yeah, rate stay. Okay, all right, there we go. So expected, of course. Is this going to be a nothing burger FOMC? That would be so brutal, man. Come on. Well, we got to listen to what Powell says, because the tone of his we have to see, right? Like what's the tone of what he's saying? If we could try to pick up some clues on when they might rates unchanged. Unbelievable. They're always right. The predictions are literally always right. Shout out to Darren. Fed statement, nothing burger. Yeah, it's now up to J Powell. So yeah, this is typically where we see the volatility come in, is during the speech. So we'll see what he says. Is he going to be dovish? Is he going to be hawkish? We're going to pull up the we'll watch some of the live stream here as well. Yeah. Shout out to Dar. We're going to stream it. We'll stream it. Let's see. Yeah, unbelievable. Let's see here. Try to pull up some local levels here on SUI as well. Let me hide the lower profile. Main range. Let me see. Do I have any local profiles up here? Yeah. So you can see here, value area low of the local range, similar levels. But we can look at this locally, right? You go above the high, deviate above, get back in, POC, lose the POC, bing bong around, back to the low, back to the POC. Technically, based off the volume profiles, just based off the volume profiles, right? It's not taking into consideration money flow just yet or anything like that. But you would say to yourself, well, hey, what do we have happen here? We had some lower lows on our price action into our key level of support, higher lows on our momentum waves. Gives us the bounce. Next likely place for price to go is the POC, which is obviously going to be some kind of a journey. But once we flip above that POC for the full fill of that local volume profile, flip that POC, we could be looking up towards about 370, right? And that's if we're going to get another full rotation of that profile. And I would say it's not the cleanest range here, right? It's not the cleanest range. But, bull divs into that value area low. Not too shabby. Boom. Literally right to the POC. It's not always that clean, but just bing bong right to the POC. See if you're holding probably a local golden pocket here or something. Yeah, you just tapped into that local golden pocket with some bullish divergences as well. Might be able to push up there, to be honest. Just based off those divs into the golden pocket. That would be a local move here, though. Let me pull this fib real quick. Yeah, very local, right? These are, 5-minute divs. These aren't anything like too major. Got your 45-minute green dot. 3-minute money flow coming up. We do have a potential lower time frame market cipher B116 setting up there. If you get that 3-minute money flow crossover with your 45-minute money green dot printing, that could be something to look for a little continuation up. I would be careful around this value area low, though, around 335. Yeah, you also have your 4-hour red dot that you're fighting. So, again, I would have to be looked at as like a micro scalp. Not something I would generally be interested in, at least in this context with the 4. I don't like fighting those 4-hour red dots, not even for a little scalp. Tia, yeah, we can check out Tia real quick. Let's see. Actually, let me pull up. We have a Tia chart. We haven't checked in on Tia on the live stream in a while. So yeah, I mean, bouncing off your value area low. Hey, shout out to Bubba Miles. Thank you for getting that membership. Let's go. Welcome to the muscle, my friend. Welcome to the muscle. Welcome to the CandleMafia. Now you can't leave. Now you can't leave. But yeah, let's see here. Got your tapping your. I mean, same thing, right? Like, I mean, good Lord, these volume profiles are literally going to take my job. I'm not going to lie. Deviate below the low, back into the range, back to the POC, back to the high, and then eventually you broke back into your larger profile. However, we got accepted back in. This value area high would be key support. Once you get stuck back in, high probability of the POC, retest the value area high, back to the POC, lose the POC, back down to the low. Bullish divergences forming all throughout here, at least on the 80-minute here, right? Lower lows on your price action, higher lows on your momentum waves. Money flow coming up as well here on the 80-minute. So we could check down here to the 5-minute money flow, see if that's coming up. Come on, Market Cypher. You can do it. There we go. Yeah, 5-minute money flow crossing over into the green. 80-minute green dot looking to print. And again, 80-minute money flow coming into the green would be nice for a daily green dot. And that is also looking to print here on Celestia as well. So as long as FOMC doesn't slam us down again, or as long as JPOW doesn't send us back to the downside aggressively here with a super hawkish stance, that green dot on the daily might be decent. That green dot on the daily might be nice with that 80-minute money flow crossover, 90-minute money flow crossover. Those are your bullish Market Cypher B setups, right? Again, yesterday we looked at the 30-minute with the 8-hour, sent us that big move to the upside. On the daily, this would be an even higher time frame context to be looking for a potential push to the upside, right? Key support, bullish divergences, money flow comes up, daily green dot printing. Could be a potential push to the upside there. And again, just based off your volume profiles, you would hope that you're at least going to get a full fill of the profile, right? Which again would be flip above that POC, look up towards about 248 towards your value area high. But you got to get above that POC and flip it. So yeah, obviously, turbulence back above it. POC acts as a magnet for price. It is the area where the most volume was transacted, making it act as kind of like a super magnet for price. So sometimes you do bing and bong around there, but once you hold it, typically the value area high is going to be the next stop. So yeah, there we go. A little quick and dirty on Tia, baby. Let's see. Shout out to All Set that said, Frankie volume profile sure did. Thank you for sharing the sauce. Shout out to All Set. Of course, bro. Of course. That's why we're here. Pepe, yeah, we can try to take a look at Pepe. We have not taken a look at Pepe in a long, long time. Let's take a look at PP here. All right. So similarly, just battling a key POC here. And yeah, I mean, this is 100%. Let me take a look here at a higher time frame. Yeah, I mean, kind of the same thing, right? Deviate below your value area low. Deviate one more time, but once you get accepted, I mean, even when you got accepted the first time here, back into the range, flip the value area low, POC is next, lose the POC, back to the low, deviate below, back in, hold the value area low, POC is next, and now we're kind of just bing-bonging around here on the POC. So I would say, like, the larger profile to look at here would definitely be this range. You've come up, flip the low to support. Oh, baby! Bitcoin getting the push down. Bitcoin getting the push down. Oh, God. Into the value area low. 96, that I think that alert was set for 96.65. Yeah. So we lose this range. This is definitely support locally. But if we lose this, once again, right, push below here. Yeah, I would say technically that last level is really sitting at about 96K. Yeah, we're hitting support right now for sure. But if we lose that, see if we can come down here to our next target. Whoops, I didn't want to hide it. I wanted to put an alert. Dang it. Come on, just give me, let me put an alert on something here. To zoom in there. Let's put it on this horizontal ray. There we go. All right, let's see here. Man, are we going to see it happen live? Jesus. Last night, we looked for the pump, and today, let's see if we can hit that target. Let's see. Beep, beep, beep. Shout out to Jesse. Let's go. Peak. Yeah, we can take a look at Peak. Let me just finish up Pepe real quick. Let's go back on over to PP. So yeah, POC would definitely be key. This is sitting at 806. I don't want to try to mess up how many zeros there are there, but that would be 806 would be your key level of support. And then yeah, I mean I would say, right, like based off the profile here on a higher time frame, like you would think, when you approach from the low, right, like when you approach into a value area from the low, the idea here is that the chances are higher that you will eventually fill the whole profile to the opposite direction, right? Same thing here. You get accepted in, you look to go to the POC, sure, you get the bounce, but eventually you are expecting to fill that range in full. Same thing here, right? And this range is pulled just from back here, right? You go below the low, you flip it to support. Sure, you get little pullbacks, but the eventual anticipation is to go back up to the value area high. So from a general volume profile perspective, that's what you would expect here out of Pepe if he could hold above the POC. So yeah, I mean, and then you also have your daily green dot looking to print. So even if you get a little more turbulence here, that green dot could potentially be the thing to look for another move above that POC. And then eventually you could look up towards that value area high. You're going to have some local resistance there. Obviously, you have some daily levels that you actually already tapped that. Yeah, you do have some daily levels up here. But at the end of the day, overall, could look something like that as long as you can reclaim that POC, right? And then just look to continue your journey. What that will look like is going to be very hard to call, but that's what I would look for. So yeah, that's kind of what I'll be looking at on Pepe. Market Cipher B looks very similar. Let's see, 3-day red dot probably looking to print. Oh no, already confirmed. 4-day red dot printing. Blood diamond, I doubt it. Yeah, no blood diamond. Yeah, no blood diamond on the hike-ins. That's a good sign. Just money flow crossing into the green with the daily red, 4-day red dot. So yeah, you could still see a little more turbulence there. 5-day VWAP coming out. 6-day VWAP coming down. Weekly VWAP also coming down. I mean, at the end of the day, right, the weekly, even if we come on over to Bitcoin real quick, like even the weekly money flow on Bitcoin, like this still is just generally, right? And this is why we look at that golden pocket as such a key level of resistance, because that weekly money flow technically still trending to the downside. But like I always say, these high time frame money flow waves are like cruise ships. They can't just like turn on a dime. They kind of have to like slowly rotate. So, you might get a late signal here. And when we have the 3-day money flow popping back to the upside, this is obviously going to be a little bit more reactive. But again, it's like, are you going to keep putting in lower highs and continue that trend to the downside on higher time frame money flow? In that case, these red dots print and all this money flow comes back out. We could be potentially, valid here, looking at that golden pocket as a potential area to put in a lower high before the lower low, right? That's the bearish case. Is all this high time frame money flow continues out, you reject the lower high scenario, and then or the area where the lower high is very likely, and then you get the bigger drop to the downside. But yeah, like 2-day money flow trying to come back up. The daily money flow is back in the green. So these time frames are going to react much quicker, right? So like sometimes if you can get that daily money flow to come up, right, that 2-day money flow to cross into the green, eventually that could potentially leak into the higher time frames and give us a fake out on that money flow, right? Just bring us back into a bigger green wave, which is 100% what we need if we want new all-time highs. Is money flow cannot cross over into the red. If it does, the idea, the bearish scenario here is looking pretty valid, right? If that is the case. Let's see. Shout out to Lord Bra says BTC, please. We actually just went over Bitcoin in detail, but we have alerts set in case we continue down there. Yeah, we're at key support there. Again, 96. Yeah, again, 15-minute money flow in the red. 4-hour red dot is finally printing here. Money flow in the green. Again, very chopped up here, guys. Dangerous trading on FOMC, always. Let's see, did you even get any? Yeah, you got little 1-minute bull divs here at the value area low. POC is very close to the value area low. So right now, locally, this would be key resistance. All right, you can get above, flip that POC to support. Hide that golden pocket real quick. Yeah, I mean, if you flip that, if you could hold above that POC, that's locally the level you want to stay above. But again, if we reject out of here, I'm going to be looking down towards that previous value area low. Right down here, right? So local support, again, value area low POC. But if we lose it, probably coming down here where that next alert is set. Let's see. Pull up exo charts real quick. Yeah, actually. Yeah, we just filled some single prints as well. Potential bullish CVD there as well. Potentially. So yeah, we'll see if we can hold that value area low. In which case, right, the major target, right, because you don't have your PLC in the middle of the range there, which is kind of annoying, to be honest. But yeah, like, I don't know. If you wound up filling that whole range, it would be back up to 97.1. But again, right, you're fighting a 4-hour red dot, right? So it's not like everything is pointing towards like that being an amazing trade or anything like that, because you would be fighting the 4-hour red dot with money flow coming out here on the lower time frames. So, but just locally for like super scalps there, definitely at support, right? You don't want to get like super bearish right as you're coming into support, right? That's why we don't look for shorts after price is coming down, right? You want to look for the shorts up at the high, right? Like what we talked about before. Low time frame bearish divergences, that's where you want to be looking for the shorts, back into the range, flip it to resistance. POC is very likely, then the value area low. And then, if that 4-hour red dot prints or confirms, right? 12-minute, 15-minute money flow crosses into the red. It's not necessarily where you want to look for the short, even if the move down is going to continue, right? You want to wait for some kind of a retracement, right, to get on the right side of the trade, right? Not just long the low. Short the low. So again, at the end of the day, you could long here, short there. You could try to catch every single move. Obviously, very dangerous situation for a new trader, but yeah, we'll see what happens. TA's getting respected here. Let me pull up chat. I'm missing out on chat here. Yeah, we'll have an 8-hour red dot as well. Yeah, 8-hour red dot could also be. Yeah, 30-minute money flow would not quite coming out just yet, but yeah, it could follow if that 15-minute red dot gives us the continuation down. So like I said, I'm only holding my short from the top. So, I don't really ever actively trade on FOMC unless I'm feeling spicy. I'm not really feeling that spicy today. Let's see. Firestream, smash that like button and show you're paying attention. Shout out to All Set. Smash that like button if you guys have not already. Let's go for, 600 likes. I don't know. We'll see what we can do. This is not my normal stream time, so we'll give it a little bit of a break. Let's say we can do like 650 likes. Let's see. And we got Jesse in the chat, the like police. Let's go, baby. Shout out to Jesse. XRP, yeah, we can take a look at XRP real quick. Whoops, wrong chart. Bada boom. Yeah, XRP, same situation we were in last night. Nothing has changed here at all for me. Key support down below, $2.05, value area low. And you can just see here contextually, you get above the high, flip the value area low to support. And we tried to make our way up to that PLC. We didn't quite make it, though. But yeah, key support here, value area low. As long as we stay above that, I don't know why I have two levels there. Yeah, 205. Stay above that level. That would, generally keep the doorway to the PLC open. If we wind up getting rejected out of this range and we get imbalanced to the downside, weekly / golden pocket sitting right here at about $1.92 to $1.87 would be the next key level of support I would look at. And let me pull up this anchored VWAP. Where's this anchored VWAP from the low? Yeah, I would definitely say anchored VWAP value area low is definitely key support. Once you break down below that, I'm probably looking down here to be quite honest. Let me pull up the VPVR real quick. Yeah, I'll be honest, like the fall off in volume is, yeah, you got a little bit right here at about $2, psychological $2 zone. But at the end of the day, from the technical perspective, you lose that anchored VWAP, flip it to resistance, lose the value area low. This is a big level of support to look at with an honorable mention at the psychological $2 zone. Might even be a situation if you do come down there where you go to that $2 zone and then wick into that golden pocket. Kind of similar like we saw down here, right? You get down to $2, you wick below. You get down to $2, you wick below. $2, wick below. But you always wind up holding that key level, right? It's probably has a lot to do with the fact that it's a psychological level. So yeah. That's pretty much it on XRP. Market cipher wise, looking the same exact way as everything else, right? 4-hour red dot printing. 15-minute money flow in the red, 30-minute money flow. Come on, market cipher. 15-minute money flow. Yeah, this 30-minute money flow has just been bing-bonging around in the red for a while. No clear signal there. But overall, 90-minute money flow. Yeah, 90-minute coming back out there. Not as clear as everything else, but very similar. 4-hour red dot printing. But those are the key levels I'll be looking at for XRP. Let's see. Shout out to Taddy Crow. Shout out to you, bro. Says, I don't say much, but I always smash that like button. Let's go. We appreciate you, bro. The likes are the easiest and freest way to help support the channel. Let's see. Blood Diamond's still there. I'm not sure exactly what Blood Diamond you're talking about. I'm not saying like, I don't know what blood diamond you're talking about. There's no blood diamond. I just mean which specific blood diamond. If you let me know, I'll go back and check it. We need a reset PTC crash button. Let's go. Shout out to Silent Q. 3-day blood diamond. Oh, on XRP. That's what you're talking about. Let's check it. Well, yeah, it's probably confirmed if I had to guess. Pull up market cipher A. Bada boom. I think it was on Hikens. No, it is not there. 3-day blood diamond is not there. That never confirmed. That's nice to see. No 4-day blood diamond. Yeah, no blood diamond. That's nice to see. Unless it was on the Binance chart, which is not there. Not there. Yeah, blood diamond's gone on XRP. That's nice to see. Yeah, because we were comparing them, being like, yeah, guys, that's not that great of a sign. But it didn't confirm, which is nice. Doesn't mean that you're definitely not going to go back down, but it's nice to see that it's gone. Let's see. Shout out to Frigid Faded, said Pendle, please. Yeah, we can take a look at Pendle. Pended. Ondo. Yeah, we'll take a look at Pendle. Ondo. Shout out to Aziz, said, Frankie, why sometimes do we just don't SFP the highs even though there may be a lot of liquidity at it? Any explanation? Aziz, I mean, at the end of the day, there's just no guarantee that you have to sweep the liquidity. To be honest with you, right? Like my last, this was back here, right? Like we had one thing I was looking for down here at 75K was the SFP. And, we just didn't get it. Why is that? You just sometimes don't need it, I guess. But yeah, you're just never always going to be guaranteed an SFP. Although more often than not, it does play out. Sometimes it just doesn't. You just don't get it, right? So yeah, I mean, I wish I can give a better explanation. But yeah, like just because we have a liquidity at a level doesn't mean that it needs to be taken. Not that I think you think this, but I do think a lot of people take the idea of liquidity and say like, oh, we have liquidity in this area, we have to go take it. And that's not necessarily the case. I typically look at the liquidation heat maps or just liquidity in general on any chart above highs and lows as like once you get close to that liquidity, it becomes a stronger magnet, right? Just because we have liquidity down here at 67K does not mean that we must go get it, right? So yeah, it's just not guaranteed. Let's see. Okay, so let's take a look at we'll take a look at Ondo first, and then we'll take a look at Pendle. Take a quick look at Ondo. Let me pull up my actual Ondo chart. What is this? That's Bybit. I think we look at the Binance. Okay, so there we go. So yeah, on Ondo we have the. Yeah, I mean, guys, I'm not gonna lie. Just make sure that's still valid. Yeah, so you have Golden Pocket POC Confluence sitting between about $82 and $80. This is obviously, we get stuck inside the value area. POC is likely. We've already almost come down to that level. This is a much older previous range. You can see we broke above, flipped it as support, got the breakout. So yeah, this would be your next local key level of support on Ondo. 82 cents. About 82 to 80 cents between the Golden Pocket and the POC. Once you lose that POC, I would just generally be looking for that continuation down towards this next zone sitting at the 786 and the weekly and the value area low sitting between 75 and almost 73 cents. Right? So these would be like the next key levels to the downside for Ondo. Right? You can see last time we hit the value area high, flipped the POC to support, tried to break out, and now we're just getting back inside the range. So this would definitely be the range I'm looking at on Ondo locally. Yeah. To be honest, this is like kind of similar to, similar to Bitcoin, right? Like what I don't want to see on stuff is acceptance back into that lower range, right? So I pull this to current price. Yeah, so I would say definitely local support here between 82 and 80 cents, like maybe even down to about, 79 cents at that value area low. That's your next key support. If you can't get back above the POC from that level, I'd be looking for the continuation down here. From a market cipher perspective, you do have the 4-hour red dot. Market cipher looks the same on a lot of this stuff. 15-minute money flow. Let's see here. Come on. 50-minute money flow coming up. And again, like the volatility today might step on a lot of this market cipher stuff. So just keep that in mind. But just based off the chart, 4-hour red dot, definitely see the 12-minute. Yeah, 12-minute money flow coming up. I would watch that 4-hour red dot, though, because, again, like the 5-hour red dot, if not printed, it is printing. Yeah, 6 hours probably going to follow, 8 hours probably going to follow, assuming we don't just get, like, you know, super dovish tone from Powell and everything just starts pumping, right? Then that would invalidate those red dots. But as it seems right now, with those VWAPs coming down, we could potentially see the that's just what's on the charts, which would call for support to get hit. Let's see. All right, let's take a look real quick at Pendle. Wow, I'm surprised we have TA on this because I don't feel like we have not looked at this in a long time. Get rid of that old fib. This is an old fib as well. Just get rid of some of these levels. Bada boom. Get rid of this. And it bounced off that weekly. Get rid of that daily. Get rid of this. All right. So let's see here. Yeah, I mean, this is a valid volume profile on Pendle. Deviate above the high, back in. POC, value area low. Deviation, back in. Flip it to support. High, low, high. Whoops. Deviation. So, yeah, so for Pendle, let me see where this fib is pulled. Okay, so that is your, yeah, that's pretty much your macro golden pocket. Still a major target to the upside if you could break out of this range. Still would be this golden pocket with the weekly, except this weekly is no longer there, I don't think. Yeah, so that weekly is tapped. This is an old chart. The golden pocket is still, actually, it's got to move it. It's not going to change the level that much. We'll change it slightly. Let me just grab this anchored VWAP. So, yeah, I would say next major target, right? If you could break out of this range, if you can get the flip of the value area high to support, push into the golden pocket, anchored VWAP from the all-time high, this would be like the next major target / resistance to the downside. I would actually argue as well, if we pull this volume profile, come on, POC of the range right in there. So, yeah, I would say, you know, and then when you look at it from this perspective, right, sure, you're at resistance here, but if you look at it from the local, the larger volume profile perspective, it's like, hey, if we get accepted back into this upper range, flip that value area high. It's the same thing as the low. I didn't have to change the line, right? You flip above that value area low. Next likely place for price to go is going to be the POC. And before we even looked at that context, right, the next target would be that golden pocket anchored VWAP anyway. So, yeah, I would say big level to flip to support here on Pendle is going to be 326. If you can get above there, not wick above and close below, right? If you can get above there and hold it as support, I'd be looking up there. And this does sit between about $4.10 and $4.48. So that's what I'd be looking at on Pendle. Pretty nice. So, yeah, if you do get a bigger rejection, obviously you have the local range down below that you can watch for the move down, right? And actually, let me grab this, drag it into the range, and let me just remark. Actually, I'll just leave that. So, yeah, then you have the POC and the value area low down below. So the question is, are you going to get back accepted into this range, or are you going to break out, flip this to support, and get the bigger move up? That's what I'd be looking at on Pendle. Not too shabby. But, again, you know, weekly red dot looking to print. I don't know about that. We'll see if that red dot prints on the weekly, because if it does, let's check that 10-hour real quick. Yeah, we're losing the local POC. The local value area high. Yeah, if that 10-hour money flow crosses into the red with that weekly red dot, could be the bigger drop to the downside. All right, let's see. Let me pull up my face cam real quick. Let's pull some stuff up here real fast. Bada boom. All right, let's go ahead and pull this up real quick. All right, So what are we going to do here? Are we going to do charts? Are we going to watch the charts, or are we going to watch the are we going to watch the charts, or are we going to watch the actual speech? Should we do half-half? What should we do here? Hang on. Let me see if I could set this up a little bit cleaner. Boom. I'll just toggle back and forth if I'm being honest. Okay. Let's go ahead and drop this. Mute it real quick. All right. Here we go. Can we hear that? Here he is. Can you guys hear that? I can't hear that. Okay, there we go. They didn't have the mics on.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Despite heightened uncertainty, the economy is still in a solid position. The unemployment rate remains low, and the labor market is at or near maximum employment. Inflation has come down a great deal, but has been running somewhat above our 2% longer run objective.
Let the liquidations begin.
In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged. The risks of higher unemployment and higher inflation appear to have risen, and we believe that the current stance of monetary policy leaves us well positioned to respond in a timely way to potential economic developments. I will have more to say about monetary policy after briefly reviewing economic developments. Pardon me. Following growth of 2.5% last year, GDP was reported to have edged down in the first quarter, reflecting swings in net exports that were likely driven by businesses bringing in imports ahead of potential tariffs. This unusual swing complicated GDP measurement last quarter. Private domestic final purchases, or PDFP, which excludes net exports, inventory investment, and government spending, grew at a solid 3% rate in the first quarter, the same as last year's pace. Within PDFP, growth of consumer spending moderated, while investment in equipment and intangibles rebounded from weakness in the fourth quarter. Surveys of households and businesses, however, report a sharp decline in sentiment and elevated uncertainty about the economic outlook,
Is the volume good? Can you guys hear?
Trade policy concerns. It remains to be seen how these developments might affect future spending and investment. In the labor market, conditions have remained solid. Payroll job gains averaged 155,000 per month over the past 3 months. The unemployment rate at 4.2% remains low and has stayed in a narrow range for the past year. Wage growth has continued to moderate while still outpacing inflation. Overall, a wide set of indicators suggest that conditions in the labor market are broadly in balance and consistent with maximum employment. The labor market is not a source of significant inflationary pressures. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer run goal. Total PCE prices rose 2.3% over the 12 months ending in March. Excluding the volatile food and energy categories, core PCE prices rose 2.6%. Near-term measures of inflation expectations have moved up, as reflected in both market and survey-based measures. Survey respondents, including consumers, businesses, and professional forecasters, point to tariffs as the driving factor. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5% and to continue reducing the size of the balance sheet. The new administration is in the process of implementing substantial policy changes in 4 distinct areas: trade, immigration, fiscal policy, and regulation. The tariff increases announced so far have been significantly larger than anticipated. All of these policies are still evolving, however, and their effects on the economy remain highly uncertain.
Value area low.
As
Value area high.
economic conditions
Unbelievable.
evolve,
Don't
we'll
get bearish
continue
at
to
support.
determine the appropriate stance of monetary policy based on the incoming data, the outlook and the balance of risks. If the large increases in tariffs that have been announced are sustained, they're likely to generate a rise in inflation, a slowdown in economic growth, and an increase in unemployment. The effects on inflation could be short-lived, reflecting a one-time shift in the price level.
Short-lived.
It is also possible that the inflationary effects could instead be more persistent. Avoiding that outcome will depend on the size of the tariff effects, on how long it takes for them to pass through fully into prices, and ultimately on keeping longer-term inflation expectations well anchored. Our obligation is to keep longer-term inflation expectations well anchored and to prevent a one-time increase in the price level from becoming an ongoing inflation problem. As we act to meet that obligation, we'll balance our maximum employment and price stability mandates, keeping in mind that without price stability, we cannot achieve the long periods of strong labor market conditions that benefit all Americans. We may find ourselves in the challenging scenario in which our dual mandate goals are in tension. If that were to occur, we would consider how far the economy is from each goal and the potentially different time horizons over which those respective gaps would be anticipated to close. For the time being, we're well positioned to wait for greater clarity before considering any adjustments to our policy stance. At this meeting, the committee continued its discussions as part of our 5-year review of our monetary policy framework. We focused on inflation dynamics and the implications for our monetary policy strategy.
He's definitely
Our
AI.
review includes outreach and public events involving a wide range of parties, including Fed Listens events around the country and a research conference next week. Throughout this process, we're open to new ideas and critical feedback, and we will take on board lessons of the last 5 years in determining our findings. We intend to wrap up the review by late summer. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Steve.
Well, at least you know it's
Steve
short-lived,
CNBC.
guys.
Thank
It's
you, Mr. Chairman,
short-lived.
for taking my question. A lot has happened since
need
the
some
last
meta
meeting. There's been tariffs put on, tariffs taken off, and meanwhile, there's a bill advancing in
Steve
Congress.
Livesman.
And I just wonder if I could press you on the last part of your statement. Are you any
Press 'em.
closer now
Press 'em.
to deciding which side of the mandate is going to need urgent care first?
Well, so as we noted in our statement, post-meeting statement, we've judged that the risks to higher employment and higher inflation have both risen. And this, by the way, of course, is compared to March. So that's what we can say. I don't think we can say, which way this will shake out. I think there's a great deal of uncertainty about, for example, where tariff policies are going to settle out. And also, when they do settle out, what will be the implications for the economy, for growth, and for employment? I think it's too early to know that. So, I mean, ultimately, we think our policy rate is in a good place to stay as we await further clarity on tariffs and ultimately their implications for the economy.
Hearing you describe what you're looking for in terms of being able to make a decision, it sounded like that's a long-term process before you sound like you're going to be comfortable, or the committee would be comfortable to act on what the data is telling you.
I don't think we know. I think if you look at where we are today, we have an economy that, if you look through, the sort of distortions in Q1 GDP, you've still got an economy that looks like it's growing at a solid pace. The labor market appears to be solid. Inflation is running just a bit above 2%. So it's an economy that's been resilient and is in good shape. And our policy is sort of modestly or moderately restrictive. It's 100 basis points less restrictive than it was last fall. And so we think that leaves us in a good place to wait and see. We don't think we need to be in a hurry. We think we can be patient. We're going to be watching the data. The data may move quickly or slowly, but we do think we're in a good position where we are to let things evolve and become clearer in terms of what should be the monetary policy response.
Nick.
Nick Timmeros of the Wall Street Journal. Chair Powell, there's naturally a lot of PTSD around 2021 and supply shocks, but there are some who argue that the current situation has notable differences. Energy costs are down, housing imbalances look nothing like they did 4 years ago, labor demand appears to be gradually cooling with wage growth running below 4%. What do you see right now that could nourish higher inflation beyond a rise in goods prices this year?
I think the underlying inflation picture
Boring.
is good. It's what you see, which is inflation now running a bit
Short
above
TT is at
2%. And we've
72.
had
He's just waiting for
basically
it.
decent readings in housing services and non-housing services, which is a big part of it. So that part, I think, is moving along well. But there's just so much that we don't know. I think.
I'm pinning that mic.
And we're in a good position to wait and see, is the thing. We don't have to be in a hurry. The economy has been resilient and is doing fairly well. Our policy is well positioned. The costs of waiting to see further are fairly low, we think. So that's what we're doing. And, we'll see the administration is entering into negotiations with many countries over tariffs. We'll know more with each week and month that goes by where tariffs are going to land, and we'll know what the effects will be when we start to see those things. So we think we'll be learning. I can't tell you how long it will take, but for now it does seem like it's a fairly clear decision for us to wait and see and watch.
So when you say that you don't need to be in a hurry, does that mean that could the outlook change in such a way that a change in your stance could be warranted as soon as your next meeting?
As I said,
Here we go.
We are comfortable with our policy stance. We think we're in the right place to wait and see how things evolve. We don't feel like we need to be in a hurry. We feel like it's appropriate to be patient. And when things develop, of course, we have a record of we can move
Everybody's
quickly when
waiting
that's
along right
appropriate.
now.
But we think right now the appropriate thing to do is to wait and see how things evolve. There's so much uncertainty. If you talk to businesses or market participants or forecasters, everyone is just waiting to see how developments play out, and then we'll be able to make a better assessment of what the appropriate path for monetary policy is. So we're not in that place, and as that develops, and I can't really give you a time frame on that.
He was dancing. He was dancing on that one. He's got a hard job, man. He's got a hard job.
So many economists have been pricing in higher odds of a recession, and several are noting that it is more difficult for the Fed to cut rates preemptively given the higher risks for higher inflation. So given the outlook, do you still see a path for a soft landing, and what does that look like?
Shout out to
Well,
Al
let
Jr.
me say, so let's look back and see where we are. So to go through 2024 up to the day, we've had unemployment in the low 4s for more than a year. We've had inflation coming down in the mid to low 2s. We've had an economy growing at 2.5%. So that is the economy as we see it now. What looks likely, given the scope and scale of the tariffs, is that we will see certainly the risks to higher inflation, higher unemployment have increased. And if that's what we do see, if the tariffs are ultimately put in place at those levels, which we don't know, then we won't see further progress toward our goals. But we might see a delay in that. I think in our thinking, we would never do anything but keep achieving those goals. But we would, at least for the next, let's say, year, we would not be making progress toward those goals. Again, if that's the way the tariffs shake out. The thing is, we don't know that. There's so much uncertainty about the scale, scope, timing, and persistence of the tariffs. So that's that. In terms of preemption, I think you can look back at the 2019 cuts as preemptive. I wouldn't say that what we did last fall was at all preemptive. If anything, it was a little late. But 2019, we did cut 3 times, but the situation was you had a weakening economy and you had inflation at 1.6%. So that's a situation where you can move preemptively. Now we have inflation running above target. It has been above target for 4 years. It's not so far above target now, and we have an expectation conditional on what happens, that we'll see upward pressure on inflation. If you look at where forecasters are, they're all forecasting an increase in inflation. So it makes it, and then we've also got forecasts of weakening in the economy, and some have recession forecasts. We don't publish a forecast about that. We don't publish a forecast that assesses how likely a recession is. But in any case, it's not a situation where we can be preemptive, because we actually don't know what the right response to the data will be until we see more data.
Colby.
Colby Smith with the New York Times. How much weakness does the committee need to see, though, in the labor market and the economy more broadly to lower interest rates again? Is it about a certain increase in the unemployment rate over a period of time, or perhaps a certain number of negative monthly job reports? I mean, how are you making that assessment?
So first of all, we don't see that yet, right? We have 4.2% unemployment, good participation, wages behaving very well. Participation, I mentioned, at a good level. So, with the labor market, we would look at the totality of the data. We'd look at the level of the unemployment rate. We'd look at the speed with which it's changing. We would look at the whole huge array of labor market data to get a sense of whether conditions are really deteriorating or not. And at the same time, we'd be looking at the other side of the mandate. We could be in a position of having to balance those two things, which is, of course, a difficult balancing judgment that we'd have to make.
On that point about balancing, I mean, you've mentioned that the committee would consider how far the economy is from each goal and the time it would take to kind of get back to that point. But what does that mean in practice? I mean, how much of that assessment will be rooted in a forecast versus data dependence?
It would be a combination of the two. I mean, let's just say this would be a complicated and challenging judgment that we would have to make.
Powell versus Trump in the octagon.
We're not in this situation, but the situation is if the two goals are in tension, so let's say that unemployment is moving up in an uncomfortable way, and so is inflation. Not the situation we're in, hypothetically, but we would look at how far they are from the goals, how far they're expected to be from the goals, what's the expected time to get back to their goals. We'd look at all those things and make a difficult judgment, and that's in our framework. It's always been in our thinking. We haven't faced that question in a very long time. So again, difficult judgment to make, and not one that we face today, and we may never face it, but we have to be keeping it in our thinking now.
Edward.
Thank you.
I'm losing my sight.
Fox Business. So we had
I'm trying to pump the
CPI
market,
report
guys.
that came out that showed month
This
over
is what's
month the
happening
first
right now. We
decrease
gotta
in
blow her up.
inflation in about 3 years. The jobs report, you said, solid that we saw. At the same time, we have those new tariffs that we're living under. So given this, should the Federal Reserve be cutting rates at all this year?
It's going to depend. I think you have to just take a step back.
We got to give him the puffer, guys. He's getting nervous.
This is why we are where we are, is, we're going to need to see how this evolves. There are cases in which it would be appropriate for us to cut rates this year. There are cases in which it wouldn't. And we just don't know. Until we know more about how this is going to settle out and what the economic implications are for employment, for inflation, I couldn't confidently say that I know what the appropriate path will be.
So following on that, so then how does President Trump calling on you personally, as well as the Federal Reserve, to make rate cuts affect your decision today and affect your job difficulty?
Doesn't affect our doing our job at all. So we're always going to do the same thing, which is we're going to use our tools to foster maximum employment and price stability for the benefit of the American people. We're always going to consider only the economic data, the outlook, the balance of risks, and that's it. That's all we're going to consider. So it really doesn't affect either our job or the way we do it.
Howard.
Hi, Howard Schneider with Reuters, and thanks for the time. I'm wondering, given the complexity about the first quarter GDP and what lies ahead, I'm just wondering what your intuition tells you about the underlying direction of the
Steve
economy
says,
right
why have
now.
a meeting if you're not going to make
Many of
it?
your colleagues have said they feel growth is slowing. If so, do you have any sense of by how much, to what degree the slowdown may be? What does your gut tell you about how things are evolving out there?
My gut tells me that uncertainty about the path of the economy is extremely elevated. and that the downside risks have increased. The risk is, as we pointed out in our statement, the risks of higher unemployment and higher inflation have risen, but they haven't materialized yet. They're really not in the data yet. So that tells me more than by intuition, because I think it's obvious actually that the right thing for us to do is we're in a good place. Our policy's in a very good place, and the right thing to do is await further clarity. And there's usually things clarify and the appropriate direction becomes clear. That's what usually happens. Right now, it's very hard to say what that would be. In the meantime, the economy is doing fine. Our policy isn't, it's not highly restrictive. It's somewhat restrictive. It's 100 basis points less restrictive than it was in, last summer. So we think it's in a good place, and we think the appropriate thing is for us to wait and see and get more clarity about the direction of the economy.
Well, let me press you on this idea of the economy being fine right now, because reading the Beige Book very closely, the last
Julio,
time
there's no
around,
visible
there
hole.
was a
There's no
lot
visible
of,
hole. I don't know.
Negative stuff, negative sentiment that was in there, and I know that everybody's looking at soft data right now. You mentioned it yourself that the sentiment's sour. But the Beige Book was talking about, the beginnings of layoffs in some industries, prices rising in some places, and an awful lot of investment decisions being pushed to the sideline. Doesn't that point to a slowdown?
It may well. It just hasn't shown up yet. And we all look at all these sentiment and read many individual comments just to get a better feel. And businesses and households very broadly are concerned and postponing economic decisions of various kinds. And yes, if that continues and nothing happens to sort of alleviate those concerns, then you would expect that to begin to show up in economic data. It wouldn't maybe show up overnight, but it would show up over weeks and months. And that may be what happens, but it hadn't happened yet. And also there are things that can happen that will change that narrative. I mean, they haven't happened, but it's possible to imagine things that, but in the meantime, yes, we're watching it extremely carefully like everyone is, but don't see really much evidence of it in actual economic data yet. And by the way, consumers keep spending, credit card spending. It's still a healthy economy, albeit one that is shrouded in some very downbeat sentiment on the part of people and businesses.
Michael McKee from Bloomberg Radio and Television. The Fed's been criticized recently by a former governor for what he calls mission creep. You take on more problems, use more tools, and then end up building tools to deal with the fallout of those tools, which then makes it a given that you will act more aggressively in the future. Is that a fair critique, and is that something you would be looking at in your framework review?
Sorry, say the critique again.
That the Fed has been involved in mission creep, gets involved in using too many new tools to deal with problems and to go too far. Is that something that the critique was based around the fact that you did
786
QE and QE and QE and
okay. Will we get our alert?
And went beyond the narrow confines of your mandate?
So, well, I mean, there are a couple. That's not really beyond the confines of our mandate. Look, I would say this: we did things. Essentially, we're on an emergency footing for a couple of years in the pandemic, and it's very fair and very welcome for people to look back over what we did and say, hey, you could have done this better and different. And one thing we hear a lot is we could have explained QE a little better. We did think we were explaining
that's the old chair.
in real time.
Trying to pump the market
I completely accept the thought that we could have explained it better. There's a lot of thinking that we went on too long with QE. I can tell you that the reason we did was we were concerned that we didn't want a sharp tightening in financial conditions at a time when we thought the economy was still vulnerable. And so we did hold on for a long time to QE, and we, of course, tapered and everything. And then we immediately went into QT, and, we're down a couple of trillion. But I get we certainly, with the benefit of hindsight, could have tapered earlier or faster. That's absolutely right. But this is all very welcome. We knew doing this in real time that we weren't going to get it perfect, and those kind of after action kind of looks are essential. And we're doing the same thing in our review, so on some issues.
The other part of that critique is that you've taken on topics that are outside of the mandate, such as climate change and trying to ensure that certain groups are benefited by your economic policies in terms of employment, et cetera.
So, okay, on climate, you've heard me say over and over again that we will not be climate policymakers. And
She's holding.
Our role on climate is a very, very narrow one. And I think that's what we've done. We've done really very little on climate. You can say that little bit that we've done was too much, but I wouldn't want to give any impression that we've taken climate and it's something that we're spending a lot of time and energy on. We're not. We have very, very narrow things. We did one guidance for the banks, and then we did
volume on me or volume on him?
Stress analysis, climate stress analysis, and that's it. And we dropped out of the network of greening the financial system. So we didn't do much on climate, but I do think, and I've said this publicly several times, I think it's a real danger for us to try to take on a mandate like that, which is very narrow application to our work. And the risk is if you go for things that are really not on your mandate, then why are you independent?
Oh, on BTC.
I think that's a very fair question. I do think we've done a whole lot less on climate than some people seem to think we did. Anyway, that's what I think.
Should you have?
That's funny. Someone said too quiet. I thought you were talking about my my volume.
Breaks down for specific categories.
We didn't do that. What we said was that we never targeted any
Get in here.
unemployment rate for individual racial or demographic groups. What we said was that maximum employment was a broad and inclusive goal. And I think what we meant by that was we're going to consider the totality of the country as we look at our maximum employment goal. Of course, we were never going to target any individual group with that, but I think some people...
She wants the FOMO long.
Wanted to hear it that way, but that's not at all what we meant. So that's just not a correct reading of our... But I can see how, maybe people found that confusing, and we have to take that into consideration.
Jolene.
Hi, Chair Powell. Thanks for taking our questions today. I'm Jolene Kent with CBS News. You've said wait and see, and the economy is doing fine today, but the impact of tariffs
that sounds like a name that someone tries to troll you into saying something bad.
Businesses big and small are telling us that they feel
I would read
it,
that name
and
slow
most
if I were
importantly,
him.
consumers say they feel it, that the challenges are here, and there's no waiting and seeing. For Main Street, what is the breaking point? What would have to happen to prompt a rate cut specifically?
Well, so we really don't see in the data yet big economic effects. We see sentiment, there are concerns that higher prices may be coming or things like that. So they're worried now about inflation. They're worried about the a shock from the tariffs, but they really haven't. That shock hasn't hit yet. Okay, so we're going to be looking at the not just the sentiment data, but also the real economic data as we assess what it is we should do. And remember,
I don't know. I don't know how much longer this is going to be.
One of them would be
it's pretty brutal.
Weakening economic activity, which translates into higher unemployment, and the other would be potentially higher inflation. Again, to say it again, the timing, the scope, the scale, and the persistence of those effects are
Dang, I should have
very,
FOMO'd
very
long
uncertain.
for Mrs.
So
Candles.
it's not at all clear what the appropriate response for monetary policy is at this time, and and by the way, our policy is in a good place, so we think we can wait and move when it is clear what the right thing to do is. Really not at all clear what it is we should do. So people are feeling stress and concern.
He's getting nervous.
Unemployment hasn't gone up. Job creation is fine. Wages are in good shape. People are not layoffs, or people are not getting laid off at high levels. Initial claims for unemployment are not increasing, in any kind of impressive way. So the economy itself is still, in solid shape.
Just a quick follow-up. President Trump now says he does not plan to remove you as chair. When you heard that,
cut it,
what
Crypto
did you
Kenny.
think?
Cut it, bro.
I don't have anything more.
Get
for
him
you
off
on
the
that.
stage.
I've
All
pretty
right,
much
Mrs.
covered
Candles,
that
thank you for
issue.
being here.
Thank
She's
you.
already deflating again, guys.
Chris.
Hi, thank you. Chris Rugaber, Associated Press. Well, I just wanted to follow up. Earlier, it sounded like you said it was unclear how the Fed, what kind of interest rate decisions you will make later this year. So does that,
come on.
In March, there was guidance that 2 cuts might happen. 2 cuts were penciled in for this year. Is that now, that guidance from the last press conference, has that been overtaken by events at this point?
We don't do a summary of economic projections at every meeting, as you know. We do it every other meeting, and so this was the meeting when we didn't do it. And we don't also kind of poll people, so I really wouldn't want to try to make a specific projection for where we are relative to that. We will, in 6 weeks, we had the June meeting, and you'll have another SEP. I'm not going to hazard a guess here today as to what it would be. Again, what I would say is that we think our policy rate is in a good place. We think it leaves us well positioned to respond in a timely way to potential developments. That's where we are. And that, depending on the way things play out, that could include rate cuts.
Now he's really trying to mess it up.
Could include us holding where we are. We just are going to need to see.
Yeah, we're definitely going to rate. Rates to cut
before we make those decisions.
He's just trying to get those liquids going.
And just to follow up on that, when you address the issue of how the Fed would handle both rising unemployment and rising inflation, how are you thinking about the fact that addressing one could exacerbate the other? So a rate cut to reduce unemployment could worsen inflation and vice versa. How do you handle those challenges?
You just captured this is the issue with the 2 goals being in tension. It's a very challenging.
What do you think he does on like a Saturday afternoon?
Which one goal is very far.
I feel like he wears that suit.
One variable is very far from its goal, much farther than the other. And if so, you concentrate on that one. And frankly, that was the case. Well, it wasn't a case where they were really in tension. But if you go back to 2022, it was very clear that we needed to focus on inflation. The labor market was also super tight, so it wasn't really a trade-off. I think what our framework document says. It says we'll look at how far each variable is from its goal, and also we'll factor in the time it would take to get there. So, that's going to be potentially a very difficult judgment, but the data could break in a way that it's not. I just don't think we know that. The data could easily favor one or the other, and right now there's no need to make a choice, and no real basis for doing so.
Oh, God.
Victoria.
He listens to rock music and buys the dips.
I wanted to ask, Congress is currently debating spending cuts alongside extending the tax cuts. And I know you've talked many times about how the path of the debt is unsustainable. But given that we're also talking right now about the economy slowing, potentially even recession, I was just wondering, is there a danger that spending cuts now could slow growth a lot more?
We don't give Congress fiscal advice. We take what they do as a given, and we put it in our models and in our assessment of the economy. So I wouldn't want to speculate on that. I think we do know that the debt is on an unsustainable level, on an unsustainable path, not at an unsustainable level, but an unsustainable path. And it's on Congress to figure out how to get us back on a sustainable path, and it's not up to us to give them advice.
Well, do you think that they should take macroeconomic conditions into account as they look at this?
I think they don't need my advice and our advice on how to do fiscal policy any more than we need their advice on monetary policy.
She's fired.
Andrew.
Thanks, Mr. Chairman. Andrew Ackerman with the Washington Post. In your Jackson Hole comments last year, you said you would not welcome further cooling in labor market conditions. The unemployment rate then was 4.2%, which is what it is now. Many forecasters now predict a higher jobless rate. How has your tolerance for weakening labor market conditions
if you don't change your tone
compared to a year ago?
Unimaginable consequences are coming your way.
Situation. What was happening last year is that over the space of 6, 8, 7
John
months,
Vucci in the chat,
the unemployment rate went up by almost a full percentage point, and it was click, 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 click each month, and everywhere people were talking about downside risk to the labor market. At the same time, payroll job numbers were getting softer and softer. So there was a really obvious concern about downside risk to the labor market, and so at Jackson Hole, and then in September, we wanted to address that forthrightly. We wanted to show that we were there we'd been there for inflation for a couple of years, and we wanted to show also that we're there for the labor market. And it was important that we send that signal. Fortunately, since then, the labor market has really, and the unemployment rate have really been moving sideways at a level that is, well in the range of mainstream estimates of maximum employment. So that concern has gotten a lot less. So, you're at 4.2% unemployment. I think we were in a very different situation. Now we have a situation where, the risks to higher inflation and higher unemployment have both gone up, as we noted in our statement, and we've got to monitor both of those. We actually have a potential situation where there may be a trade-off or tension between the two, potentially. We don't have it yet, and we may not have it, but that's what we have, and that's why I think it's a very different situation.
I guess I want to follow up by asking how much of a rise in the jobless rate you could tolerate.
Yeah, I can't give you I'm not going to try to give you a specific number. I'll just say we have to now be looking at both variables and which of them is demanding. If one of them is demanding our focus more than the other, that would tell us what to do with policy. If they're more or less equally distant and equally or not distant, then we don't have to make that assessment. The assessment is you wait. So I'm not going to try to be really specific about what we need to see in terms of a number. But if we did see significant deterioration in the labor market, of course that's one of our two variables, and we would look to be able to support that. You'd hope that it wasn't also coming at a time when inflation was getting very bad. And again, we're speculating here. We don't know this. We don't know any of these things.
He's just like a crypto DJ.
Very hypothetical.
Just a speculator.
We're just going to have to wait and see how it plays out.
Thanks. The Fed, ladies and gentlemen.
Claire Jones, Financial Times. In terms of getting some clarity, we've got some talks at the weekend in Geneva between the US and China. A lot of economists are attaching an awful lot of importance to what we hear from those talks. How much importance are you attaching to them in terms of judging what will happen to the US economy going forward? And just in a similar vein, some economists are saying it's days, not weeks, that we have until we start to put the US
the markets don't even care anymore. Yeah, I'm about to cut this, to be honest. I'm going to go over the charts real quick, guys.
Higher prices.
You're in the wrong room for clarity
between the US and China, so it'd be good to have your view on that too.
So, these are not talks that we're in any way involved in, so I really can't comment directly on them. So, but what I will say is this, we had, coming out of the March meeting, the public generally had an assessment of where tariffs were going, and then April 2 happened, and it was really substantially larger than anticipated in the forecasts that I had seen and in our forecasts. So, and now we have we're in a new phase where it seems to be we're entering a new phase where the administration is beginning talks with a number of our important trading partners, and that has the potential to change the picture materially or not. And so I think it's going to be very important how that shakes out. But we simply have to wait and see how it works out. It certainly could change the picture, and we're mindful of not trying to make conclusive judgments about what will happen at a time when the facts are changing.
All right, and that's it for Mr. Powell there. Yeah, guys, that's nothing burger FOMC, at least now, right? Sometimes we get the little bit of a delayed move here. Let me pull up the charts really quickly here. So this is kind of what we're working with here from a technical perspective, right? So we have our man, you got to give the guy some kind of a break, right? He's got a rough job, right? Imagine going up there and getting hammered with all these questions, and it's like he can't be too decisive. It's like people try to sneak some questions in there, like, all right, so what's going on? Are we going to pump this thing or what? He just skirts it every time. Let's see. Nicholas, what's going on, bro? Al Jr. said, just out of curiosity, from here we continue with the 5:45 p.m. Regular 4-hour stream, right? Shout out to Al Jr. Yes, we're just going to lead right into the 5:45 p.m. Eastern Standard Time stream. Yes, 100%. We're just going to stream all day long, baby, all day long. I'm just kidding. But yeah, guys, when we look at this, right? So we do have our little local volume profiles. This is what we were looking at before they started talking. But yeah, I mean, we rejected the high, came to the low, getting a little bounce off the low. So, I mean, this is a very, very hyper local range, just to like kind of give you guys that. If we do end up losing this value area low, I do think that we are likely to come down here. This is our next key level. Excuse me, between $95,679 and $95,353. And this is really, if we are going to continue down a little bit, if there's any shot that we're going to come down to 91K, I would say losing this zone would be somewhat important. 786 sitting at about 95.1, which is, it's an honorable mention, right? Because like if you're going to be looking for bounces off there, you're kind of bouncing right into resistance. But at the end of the day, if we get accepted into this range, we could look for the POC, lose that POC. Maybe that's where we continue down to the value area low. So we do have like the little mini range up here that we can look at. I would say holding this level here at about $96,040 is important if we're going to continue up. But again, we do have the 4-hour red dot, which is still, drum roll. Come on. There we go. 4-hour red dot printing. 15-minute money flow is back in the red. 24-minute money flow. Come on, Market Cyber. Coming out in towards that zero line. Looking to cross over into the red. Might get a green dot here, but this is going to be the local range, guys. I will say if this 8-hour money flow crosses into the red, 24-minute money flow and 30-minute money flow winds up crossing over into the red with our 8-hour red dot printing. Very similar to yesterday where we looked for that to give us the big move up. We could look for that to give us the bigger move to the downside. So I will just say key level to lose there is going to be about $95,646. Get stuck under that value area high. We could look to fill that range down to the low, at which point we can then zoom out and see if we're going to make our move down toward that $91,000 previous value area low, sitting right here at about $91,000. We also have the liquidity sitting down there. We have this a 786 down there as well. So there is support down below this local value area low. But this is what I'm going to be watching leading up into the live stream at 5:45 p.m. Eastern Standard Time. If we lose that value area high, it might be the bigger start to the downside. And just from a higher time frame perspective, once again, just to kind of show you guys, we are obviously, from a simple standpoint here, I'll pull up the current value area. And, we are just still kind of bing-bonging around in this area of resistance. So we'll see, right? We still, like, for the real sign of strength, we got to get above 98.3. And then that's where we could see the bigger move to the upside. Until then, we're just battling that resistance. But if we get that move down to 91K or even 89.5 down to the macro current value area low, this is really what I would prefer. Even if we are going to continue up, I would just love to see if we can come down there. But if we don't, 98.3 is that next key level. Once we break above there, I would be looking at 100K and beyond. Market Cypher on the 4-hour will be calling for the move to the downside first, though. So that's what I'll be watching for leading up into the live stream, and then we'll see, if we lose those key levels. You guys have all the doorways to lower prices and the key levels to hold. Let's see. Let's see, bada boom, bada bing. Shout out to Crypto Rich said, Frankie, he the man. If he can't TA, no one can. What up, Frankie? Hey, yo, thanks for the sauce. Shout out to Crypto Rich. Yeah. But guys, if you just tuned in, just scrub back to the beginning of the stream. My sentiment remains the same before the stream and before the Fed meeting and after. But we cover all the key levels. Kind of a nothing burger there, at least as of right now. But I'm watching that 4-hour, 15-minute bearish market Cypher B strategy to see if we can get that push into the downside. And then we're just going to be looking at that scalp range. If we get stuck underneath that value area high, we could just look to continue through that local profile, in which case maybe we work our way in here, deviate below the low, test that $91,000 level, which is going to be, again, that previous range value area low zone. And if we just continue up, 98.3 is the next level to watch. So with all that being said, guys, thank you all so much for tuning in. I appreciate every single one of you guys outside of our normal streaming time. I appreciate everybody for hanging out with us there. Let's see. Crypto Rich said, we ever clear that CME gap below us? No, we did not. We do have that CME gap sitting. Did I pull my face cam up? Yes, yet I did. We do have the CME gap sitting down there near. CME gap sitting on down there. Bada boom, bada bing. This was a drawing from the other day. Whoops. Yeah, sitting down here closer to like the $91,000, $92,000 zone. So again, we filled that upper CME gap as well. And again, I mean, even when we look at this, guys, like, this is a slightly different fib than I was looking at originally, but you pull that to the actual low here. Golden Pocket 786 is the area to put in not only a macro lower high, but even this local lower high. Again, that's why I say breaking above that 786 is going to be the invalidation to see that $98,300 level come in. But the this is not 98.3. 98.3 is just up here. But, this is the area that you could put that lower high in for the bigger correction to the downside. So I'm just watching that local profile. At the end of the day, it's simply just a deviation above. Let me hide some of these levels so it's not super, super, super confusing. Right? Like, whoops. There's your area where the lower high is very likely. If we get back into the range, we just look at that as a deviation above the volume profile. We got it up here, got the move back into the range, back to the POC. We bounce off the golden pocket. Maybe this is another deviation, get stuck in, underneath the value area high. We could look for that continuation to the downside. So we'll see what happens. If you want to move to the upside, you got to get above that 786, in my own personal opinion, which right now sits at about $97,000. It's also very confluent with a lot of our other key levels. POC of the range is right up there as well. This is another major, major level we want to remain above if we want to see higher prices. If we get stuck underneath it, it would call for more downside. So those are the local levels that I'm looking at. But my grand overall sentiment does remain the same on Bitcoin if you've been watching the streams for the past few days. And I think that is all we got. So with all that being said, guys, thank you for tuning in. I appreciate every single one of you guys for hanging out with us here. Smash that like button on your way out if you appreciate this free educational content, NTA. Shout out to Crypto Rich. Shout out to John Vucci. Shout out to Jesse. Shout out to Al Jr., Gigalong Bottom, Mike Bennett. Shout out to, and also, by the way, guys, shout out to Mike said inflation is both transitory and short-lived. Powell's tombstone. But yeah, guys, I'll see you in a few. Shout out to Cows World in the chat. Good to see you in here, bro. But yeah, I'll see you guys in a little while at 5:45 p.m. Eastern Standard Time for our normal live stream, where hopefully we have something to talk about. If not, we might have to do a short stream. So guys, I'll see you later. That's all I got. Hasta pasta. Frankie Candles out. Bing bong.
Here we go, at the top of the class on a roll, and it's time to run it up, yeah you know. Maxed out, put the pedal to the floor, ayy, on the roll, here we go. Yeah, we winning by a landslide. Never see me coming, I'm a landmine. Yeah, I ain't taking orders in command, like, yeah, you about to see me on demand, like, you know on demand. If you ain't know, you about to understand. Yeah, I got the team by my side, right hand. Yeah, take it to a string, you ain't seen it like that. Yeah, and it's the dream, and we coming for the bag. Yeah, and we ain't ever going back now. Future expedited, now we on the fast track now. They won't lend a hand, now they see us on the map now. It's time to act out. Here we go, at the top of the class on a roll, and it's time to run it up, yeah you know. Maxed out, put the pedal to the floor, ayy, on the roll, here we go, yeah, at the top of the class on a roll, ayy, and it's time to run it up, yeah, you know, yeah, maxed out, put the pedal to the floor, yeah, on the roll, here we go, here we go. Here we go, at the top of the class on a roll, and it's time to run it up, yeah you know. Maxed out, put the pedal to the floor, ayy, on the roll, here we go, yeah, at the top of the class on a roll, ayy, and it's time to run it up, yeah you know, yeah, maxed out.